Apple CEO, one of those 10 percentage points of revenue, the growth came from customers buying iPhones to get ahead of tariffs that were imposed in April. On the tariff front, Apple said its third quarter hit was less than expected and had projected back in May. Cook saying that the fourth quarter impact, though, could be about $1.1 billion. And in a reversal from the past 2 quarters, Apple saw sales in China rise 4%. For fiscal fourth quarter, Apple said it expects a mid to high single-digit increases in overall revenue.
That's what I thought was interesting.
Yeah.
If they think that this was selling to get ahead of those tariffs, but they don't see it slowing down in the current quarter. That's kind of interesting to kind of weigh that out, how they measure that, how you figure how much was pulled forward, how much wasn't.
Given how much the stock has come down and how positive a lot was yesterday, you would maybe thought that more than a 1.8% gain. People are still some trepidation still about Apple. And AI, Cook noted that the company is significantly increasing investment in CapEx in both talent and computing, though he didn't give specific numbers.
And then there are shares of Amazon, which are falling on second quarter results. Profit and revenue both beat expectations, with sales growing by 13% year over year. But the company gave some light operating income guidance for the current quarter. On the cloud side, Amazon Web Services was up by 17.5%. That was better than had been anticipated, but it was nothing compared to the amazing results you'd seen from Microsoft Azure, where their cloud revenue was up by 39%, and then Google Cloud, where their revenue was up by 32%. Capital expenditures, the company CFO at Amazon saying that capital expenditures in the second quarter actually topped $31 billion. That was up incredibly, something like 90%. And will remain at that level in the second half of the year. Tariffs were another topic in focus. And here's Amazon CEO Andy Jassy on that earnings call.
Through the first half of the year, we haven't yet seen diminishing demand nor prices meaningfully appreciating. We also have such diversity of sellers in our marketplace, over 2 million sellers in total, with differing strategies of whether to pass on higher costs to consumers, that customers are advantaged shopping at Amazon because they're more likely to find lower prices on the items they care about.
For the second straight quarter, Amazon included recessionary fears and tariff and trade policies as factors that could affect its guidance. And again, that stock is off by about 7.75%. Year to date, it's down by 1.5%.
Coming up, a stellar first day of trading for software company Figma. It was huge. All of the eye-popping numbers, plus more on that. And
the open and the close for volatility being
the whole thing was beyond. We'll get into all of it.
Bigly.
It was big. It was as bigly as they come. Welcome back to Squawk Box this morning. Take a look at shares of software design developer Figma soaring. And when I say soaring, that's probably an understatement in their public debut yesterday. The company pricing its IPO $33 a share. That was originally open for trading yesterday at $85, then closed at more than $115. At that point, Figma's market cap was close to $70 billion. You remember, and we've talked about it, Adobe agreed to buy that company back in 2022 for $20 billion, but that deal had fallen apart over concerns from British competition regulators, and we spoke to Figma CEO Dylan Field pre-market yesterday before all of the craziness began, and here's what he had to say about possible M&A activity, what they may do next.
Expect us to take big swings. Maybe that's on AI,
Right.
maybe that's with M&A at scale. And I thought it was really important for people to know that. I still do, because obviously M&A, if it's done well, is often misunderstood. It can create volatility, and we don't have a plan for that right now. We're always looking.
Right. Shares of Figma right now, pre-market, $129. Two pieces. He did have a comment, I wish we had shown it, where he talks about the idea of you don't want to look at the stock price for one day because it could be a drunk elephant. That was his comment in the morning. I don't know
bet
if
he
you
looked.
I don't know if you think this is a
bet
drunk.
he looked.
I don't know if this is a drunk elephant or not. We'll see. The other thing is we mentioned his compensation package yesterday, which is very Elon Musk-like with these market cap targets. Well, guess what? He already blew through some of them.
Well, he only had to get to $60, right?
for the first tranche.
60 days.
Has to be there for 60 days, but then there's
Above
other parts
60
where they have to be for years. So,
Yeah.
and then he has to hold. So,
Yeah.
we'll see. But it is quite something. The other question, of course, and Bill Gurley talking about this on X last night. How much money did Figma just leave on the table? How mispriced was this?
Bankers leave
If you're Dylan on a morning like today, or at the end of last night, beyond going out and hopefully having a cocktail, are you saying to yourself, I'm having a cocktail because I'm excited and I'm celebrating, or am I having a cocktail because these Wall Street bankers screwed this up so badly in terms of the supply and demand of my shares and how they were priced? And that's still always the question.
Because the company didn't get the money it could have had. It's like,
I mean, it's just, yeah.
Were they selling shareholders, or was it just for general corporate purposes? Were they selling shareholders?
No, so most of this cash that was going to be raised was actually to pay taxes, weirdly enough. It was not
Either one.
like a huge big cash.
In the past, we've always, and we've been, a lot of times been wrong, to say that when you see a certain number of shares trade at a level like that based on demand for people that can't get in, it's a mistake to multiply the total number of outstanding shares by that price and think that suddenly...
it was 40 times over.
Right, but you can't monetize suddenly that if everybody wanted to sell and take their, what's the market cap
Right.
now? If everyone wanted to do that, that money probably doesn't exist. But every time, we said that about Google when it opened at like 80, and it's up probably 100 times.
Right.
So I'm not saying it's not gonna happen, but I don't understand. I haven't heard the term drunken elephant before. Is that like a drunken Republican, or what?
Drunk giant.
Just a great big...
We'll have to go, you know what, in the 7 o'clock, we will grab the Dylan Fields video as he
meant.
references the drunken elephant.
I don't know if I would right now take it to the bank. And it also sort of, your bigger question about M&A and IPOs and sentiment and everything else.
Well, I'll tell you,
that's frothy,
the
isn't it?
number of people yesterday who I was on the phone with who said, bankers who were just watching this in awe with their mouth agape, and saying there were a whole bunch of companies that wanted to come public who are now saying we need to do this immediately. Like the window is open, let's go.
And by the way, you can't blame the bankers too much.
No.
I mean, maybe
I think it's a great...
what if it fell apart?
I think I'd rather have you do it that way and set a basal level for where that thing opened, and suddenly everybody's thinking about it not as a $20 billion company anymore. So when you conjure up all that demand, and it's like the guy at the Velvet Rope at some stupid club down in Soho. And you get in there, and no one's in there. There's a big, huge line.
If you ever made a pass.
That's happened 30 years ago, and nothing ever happened. I had no success. I don't know why I was waiting in line. I should have never waited in line. But it is, wow, that was something. I thought
Something to behold. I have to say, I was watching.
I remember. I still have no idea what WTF that comes. I was listening to him, and I wanted to understand really bad, and I stopped listening because I don't see how they can possibly design a rollout of some idea that a person has. I don't know why they need thousands of employees. I don't know what they're doing. I don't know what kind of idea they're talking about. I don't know how it could be, that skill could be worth $50 billion or whatever it is. Can you explain it to me?
It's 58.
How does it, what do they do and why could it be, and how can someone 25 years old have figured this out?
He's 33.
Okay.
It's effectively a design.
Okay. I was listening.
It's a piece of design software.
Tried to understand.
You and I, let's say we wanted to like build an app. And
Why don't we?
Beautiful. We could.
Then let's.
With this software, we could go do it today. You could do it with a prompt. You don't even actually have to even. So, 4 months ago, professional designers used this software, and they would move things around. And if they were making an ad or a design on the, by the way, Netflix uses it in terms of like the way the Netflix screen looks, all of that. They would be doing that. Today, you don't even need to do that. Joe, you and I could just, and Becky, we could just type in what we think the screen should look like.
Design me a screen.
Basically.
Is that ability? So that seems, again, what's the underlying product or service that we're selling in the? Is just the ability to do that worth all this money?
Well, what they have is it's an enterprise business where effectively the top Fortune 500 companies, everybody uses this software.
They do.
They do.
For advertising.
Well, not just for advertising, for anything that's design
To
related.
design something. Okay.
Yeah.
All right. I'm trying.
I'm thinking about the jobs that are on the line. Who gets laid off as a result of this stuff
Right.
because it's so good now.
Will you
Also-
work on that so we can, Becky, you want in? You just said us.
I'll stay here. You guys go away. I'll hold
I
down
know,
the fort
she's,
here. You guys go do your thing.
Bird in the hand.
Yeah. All right, let me tell you about some breaking news right now. We've got second quarter results that are just out from Chevron. Earnings came in at $1.77 a share on an adjusted basis. That's better than the $1.70 that the street was looking for. Revenue also came in better than expected, $44.8 billion versus $43.8 billion. Lots of other metrics that are in here that came in above estimates as well, including nut production. They set worldwide and U.S. record levels that they'd seen on this for the Permian Basin, for example. Production hit 1 million barrels of oil equivalent a day for the first time ever. I spoke with Mike Wirth. He is the CEO of Chevron about some of these things. And he said a decade ago, they were barely at 100,000 a day in the Permian. So you're talking about tenfold increase with these things. Big point here is two things. They beat on expectations, and also free cash flow was up by 15% despite crude oil prices coming down by 10%. You are going to see lower earnings from all of these oil companies because crude oil prices have come down so much, but he was pointing to the efficiencies that they have with this. He said their free cash flow was up because of stronger production. Growth is in the high margin barrels in places like the Permian too, so that really drives free cash flow. In fact, he says over the next 2 years, between 2024 to 2026, you are going to see free cash flow grow by $12.5 billion they're now projecting, $8.5 billion in 2024 to $21 billion in 2026. And he said, as a result, here's the key for investors. For dividends and share buybacks, it means that they are very secure, in Mike Wirth's words. He said that they're buying back somewhere between $10 and $20 billion a year. And they're also talking about what they're seeing with Hess. It's been 2 weeks since that deal was finalized because of the litigation that was kind of brought out of the way. They won on that court case. Hess is now going to be saying, they say, Hess is going to kick in about $1.5 billion additionally from Guyana with the big reserves there. And they're also going to see about $1.5 billion in synergies from Hess. Also pointed to some new chemical facilities in the Middle East that are going to be coming on that he thinks will help them over the next year or two. And when he talked about what happened with Hess, you know, there was a long time that came up. That deal was announced back in October of 2023. It was slowed down by the mediation that was brought by ExxonMobil over that Guyana share. But he said since they've announced it in October 2023, they've repurchased about half of the shares that they had to issue to do this. It was a share conversion for this, to buy this. So it made it a much better deal than they saw originally. He said this was a very good deal. It's an even better deal now. He said since they announced this, they were going to see $1 billion in synergies by the end of the year. And that's half the time that they originally said, because originally they said it would take a year to get to that. He said they had an asset sale of a few $100 million for the United States. And again, said they were able to hit the ground running because this took so long. They were able to hit the ground running in the first 2 weeks. So I asked him, was he grateful to ExxonMobil for slowing the process down, for making them be able to get all their ducks in a row? There was a long pause. He said no comment. And then we both laughed. Obviously, there were a lot of complications that came out of that. It was not fun, but they are going to be working together on the ground in Guyana. He pointed out that they have a few hundred people there from Hess who have been there this entire time. He said they're going to be keeping those people there, but just pushing him about the partnership, whether they do it. He said, partnership is one of Chevron's core values. They work with people. Their on-the-ground relationships will be fine. Hess had a couple hundred people working on the ground. But you can tell there's definitely some tension there, and it has strained relationships to some extent. He talked about how when Rex Tillerson was still the CEO of ExxonMobil, before they found the big Guyana reserve, they'd been working together on that with Hess. He said John Hess insisted that they drill another well. Rex Tillerson thought they were talking about Equatorial Guinea, a different country, didn't even know what country they were in.
Great.
But
and he became Secretary of State.
Because
awesome.
he insisted on them doing that, John
Guinea,
Hess insisted
Guyana,
on that.
down there somewhere.
They found this huge reserves, but he did say their people work very well on the ground together, and they expect that great cooperation to continue, and for them to continue to work well together. Now, we're going to be speaking with Darren Woods from ExxonMobil later on this morning. We'll get a chance. Mike Wirth is going to be coming up today in an exclusive on Squawk on the Street. We'll get the chance to talk to Darren Woods, but again, a long partnership that they've had on the ground, and both sides will say that they expect that good relationship on the ground to continue.
Both on at the same time.
Yeah, you said.
Yell at each other, huh? Coming up, President Trump calling for lower drug prices. Really, I mean, we're almost talking about price controls here. We have some comments putting pharma executives on notice with a series of letters. We'll have that story next after a break.
now.
President Trump demanding that major drug makers lower the prices that they charge Americans in the next 60 days. In a series of letters sent yesterday, the President told companies to offer the full portfolio of their drugs to Medicaid patients at the same prices paid abroad. This is what's known as most favored nation rule. Trump also told drug makers to guarantee that Medicare, Medicaid, and private insurance patients get the same lower overseas prices for all newly approved medicines, and he demanded companies create a direct-to-consumer option for certain drugs. The efforts are likely to be met, obviously, with fierce pushback from the pharma industry. Experts say it's also unclear whether the president has the authority to force drug makers to lower their prices without the help of Congress. We're going to talk more about this next hour with former FDA Commissioner Dr. Scott Gottlieb, and I don't know what the answer is, but we're importing price controls. I guess once the price controls were being levied in Europe is when I guess pharmaceutical makers should have taken a stand, probably back then. Once it happens over there, you can see why the president says, why should they, their citizens get these prices when ours are paying 10 times as much? But so fine, for the drugs that have already been developed, maybe we're able to keep those. But long term, you see about innovation for drugs over in Europe, there's been almost none. And that's why they want, and defense and research and development, people want Europe and overseas to step up to the plate because it's really harmed innovation. Is that going to happen here in the future drugs? Why wouldn't it happen here? So this could be, the unintended consequence of this could be that we don't have innovation anymore in this country, and price controls never work, and I don't see how do you look at this as anything other than price control?
No, but look, there's a fairness argument.
That's what I mean, and it's a populist argument, but we should.
But I'm with you. I worry.
We should have when it started happening over there, and it's been happening for years, where people get drugs for 1/10 of the price. Why?
Right.
They didn't even develop them over there.
It's one thing with countries that are not as developed as us, but when
Right.
you're talking about developed nations where they can and should be able to afford prices, that's
what should the drug companies have said to like the EU when they were
I don't know,
passing
laws.
the price control?
Right.
I don't know, but now that the horse has left the barn, the toothpaste has left the tube. Humpty Dumpty has already fallen off the wall. You've already made an omelet. You've already cracked the egg. Toothpaste? Did I say toothpaste?
You've already done it.
Did that one.
Did Genie's already out of the bottle? Did I do that one?
I don't know, but I think there's some earnings that are coming out of the
Okay,
bottle.
let's do it.
There are. In fact, second quarter results now out from ExxonMobil. Earnings came in at $1.64 a share. That was better than estimates of $1.54. Revenue came in at $81.5 billion. Cash from operations of $11.5 billion came in below estimates, but the earnings were higher than expectations because, again, you saw higher production. This was the same story that we just saw with Chevron, where higher production made up for lower oil prices, particularly in a position where a lot of those are high margin barrels. So the more that you can produce that are high margin, places like the Permian Basin, the more profitable that is, and that does make up for it in the earnings. You can see right now ExxonMobil shares are up by about 0.1%, and don't miss an exclusive interview with ExxonMobil CEO Darren Woods. That is coming up at 8:10 Eastern Time. We're going to talk to him about a lot of issues, where he sees oil production and oil prices going, where he sees world demand on some of these things. It'll be the first time we get to talk to him on camera about what happened with the Hess purchase going through by Chevron. So we'll talk to him about some of those things too. And also, Joe, what you were just talking about, European Union and some of the regulatory overreach that you might see on some of these things that is hitting the oil companies as well.
Oil companies as well. There's I don't know how much I want to get into it. I've given up on pushing back on the climate alarmism with actual science, but Kimberly Strassel has a great piece, and things are changing. There's change in the air right now with Chris Wright and what's going on in terms of endangerment and that whole ruling from the Obama administration that puts CO2 in the same class as horrific particulate sulfur dioxide pollution, because down the road it could harm human health from supposedly if we had an increase in the adverse weather events. But and I've talked to Darren a lot about, so you got activist shareholders that have 3 shares and you're doing backflips, doing all these uneconomic.
ExxonMobil is not. In fact, they have shut down.
I know, but he still
I have to
pushes the
say-
net zero carbon
Well,
capture, all
That's stuff that they've invested billions of dollars in.
I know, because they were forced to, non-economic. There was a time when
I would
Big
say
Oil was never going to invest another dime in exploration.
Yeah.
They were going to give it all back.
Well, that's not the
And
case. And higher production comes
Thank
from
God, but it
ExxonMobil
should have
and
never been.
Chevron is part of the reason that they're able to do so well at this point.
Right.
I-
It's been a tough.
Mike Wirth will tell you that he thinks oil prices are coming down from here. That's what he said. Oil prices
the
are coming from supply being high, from demand questionable. So Mike Wirth thinks that oil prices will come down from here, not push higher. And as a result, you've got to have a really strong balance sheet. That high production that they're doing, both of these companies, is what's helping them with the balance sheet. And we'll talk to him about that. Mike Wirth said their dividend is very safe. Their share buybacks levels are very safe. And he said that's because they have a very strong balance sheet. We'll talk to Darren Woods about some of those very same issues. Okay, we told you just a few minutes ago about Apple's banner third quarter. The shares are higher this morning, up by about 1.6% right now. Joining us to talk more about it is Wamsi Mohan, who is Bank of America Securities Senior Equity Research Analyst. In a new note this morning, he is maintaining his buy rating on the stock. He's raising his price objective to $240 from $235. The stock right now is at $211. Wamsi, what did you see last night? What made you raise your price objective?
Yeah, good morning, Becky. Thanks for having me. Look, we got some really good results from Apple overnight. They beat on revenue, they beat on iPhones, they beat on services growth, they beat on gross margins. So you can't ask for a whole lot more in terms of the quarter itself. And then from a guidance standpoint, despite absorbing higher tariffs, they were able to guide ahead of the street, particularly on gross margins, which is where I think the bulk of the concern was that they wouldn't be able to do that. Now, they didn't incorporate everything that can happen from a tariff standpoint. Obviously, Section 232 ruling is still kind of pending out there, so it means that there is some risk, but the company itself is navigating that, trying to address and take near-term actions to make sure that they're well prepared in case they do get impacted negatively from a tariff standpoint. So our estimates went up about 3% for the next couple of years, and we raised our price objective accordingly.
You said there's also some risk from Google, that imminent ruling on the DOJ. How do you game that out?
Sorry, Becky, your audio didn't come through for me, so
Okay,
do you mind
Wamsi,
repeating
I'm
that?
sorry, just talking about the Google risk. You say that's still imminent. How do you game that out?
Yeah, that's a complicated question, really, because look, when you look at the Google TAC, obviously it's a material part of Apple's overall profitability, call it about 10% or so in aggregate terms. Now, when you think about what the judge might say, and this is outstanding still and likely to be appealed, there could be an instance where the judge says that Google cannot pay to be default search on Apple devices anymore. If that happens, it doesn't really mean that the $20 billion that they get goes to zero. The way to think about it is, what are the options? Are we going to get a choice screen instead? If we get a choice screen, how much of that traffic does go back to Google? And so Apple and Google would have to renegotiate this agreement, in which case the financial impact of this actually might not be a whole lot. And frankly, I don't think it's that imminent in terms of the financial impact. I think that filters in over time, and it gives Apple some time to look at alternative options as well. So we think that it is a risk more to the multiple than to the earnings at the moment. Obviously, the decision is going to be somewhat imminent within the month of August is what is expected. So it does put a little bit of a lid on near-term upside from that perspective.
Wamsi, I just quickly read through the note. Maybe I missed it. I didn't see any reference to AI, but that's one of the huge questions that investors are kind of focused on. What is Apple's AI strategy? Do you believe in it?
Yeah, so we think that Apple ultimately will be a winner at AI at the edge. Now, they said on the call, I think, to investors essentially that, look, we're significantly increasing the amount of investment that we're making. Now, when you look at the numbers, they are repurposing folks that were deployed in other areas back into sort of the AI initiatives, whether it be enhanced Siri development, whether it be Apple Intelligence. And so there is a redeployment and shift of resources. So we wouldn't immediately see it as significantly higher OpEx. They don't have the same CapEx strategy as all these other mega cap names do, right? Like, I mean, their LTM CapEx is $9 billion. That's nothing compared to what these mega caps are spending. So clearly their whole business model is going to be predicated more about leveraging other people's AI models through their device and distribution mechanisms. But you could see in the future, maybe they would have some kind of agreement with some of the LLMs to go back and include those as part of a curated version of these running that is specifically targeted towards on-device benefits, right? Whether it's just contacts, photos, emails, being able to reply quickly to text, being able to do a few more things. I think all of those put together is what Apple is trying to do to make your device and productivity better, rather than some overarching, like, super intelligence that a lot of other mega caps are trying to do. So it's a very different, very focused model. I would say similar to kind of search, where they didn't own the search IP, but they monetized it very effectively.
Okay. Wamsi, thank you for joining us this morning.
Thanks for having me.
Guys, got to tell you about this. President Trump just posting on Truth Social some more criticism right now for Fed Chair Powell. He's saying now the following, quote, Jerome Too Late Powell, a stubborn moron, he's now calling him, must substantially lower interest rates now. If he continues to refuse, the board should assume control and do what everybody knows has to be done. We're going to have a lot more on all of this, not only when we get back, but also at the top of the 8 o'clock hour, we're going to talk about the Fed. So do not go
I guess he's talking
anywhere.
about the FOMC board, which, by the way,
Yeah.
there were only 2 dissents in the vote that just came through.
Yeah, first time there were two since 1993.
Yeah.
You know what? He could get even louder if it's a crappy jobs number.
Yep. Let's see.
We'll find out at 8:30.
Coming right back after this.
My God, not only is it Friday, not only is it Friday,
Your turn.
I get to do the
It's
five
your
things.
turn.
I get to do the 5 things to know ahead of the opening bell. Shares of Coinbase are tumbling. Second quarter earnings beat estimates, but revenue fell short. Retail trading volume grew 16%, but that was below expectation. Despite today's decline, the stock is still up more than 50% over the past year. I saw someone raise their price target earlier, and I just happened to look at the market cap of Coinbase. And we're going to have Michael Saylor on later today. I think he's in studio. Coinbase now $80 billion. Strategy itself, if you look at Strategy's market cap,
Bill,
115 or something.
where's Circle now too?
Circle, all of them. None of them are, actually, they're a little more than Figma. What is it?
Figma.
Figma. Sorry. Roku shares also falling despite reporting better than expected second quarter results. Company guided to third quarter earnings and profit a bit above consensus. Roku stock is up more than 30% in the last 3 months. NVIDIA denying its chips have backdoors that would allow anyone to access or control them. That follows Chinese regulators summoning company officials to explain what they fear are risks in NVIDIA's H20 chip. The U.S. recently gave, as you know, the company the green light to begin exporting those chips to China after a ban earlier this year. CSX has spoken with Goldman Sachs about possibly doing a deal with Arrival. Like us too, that's according to
Well,
the
we have
Bloomberg.
no rivals left.
No.
The original story was that Goldman was talking to Berkshire Hathaway about Burlington Northern Santa Fe, but Warren called in to tell us that that was not the case. Now the rumor is that Goldman.
Where was I?
Goldman's working for CSX now. Yeah.
Where was that?
But maybe Goldman was always working for CSX.
Could be.
Warren
Probably.
called in?
Well, yeah, Warren called in and said,
Did we put him on? And we
we called him a commercial break and just said, hey, I talked to Greg Abel. Nobody here who makes decisions has had any conversations with Goldman about it, was what he told us.
I called him about Larry, and you know what? It's not easy when you do a phone ring.
Yeah.
It's not easy.
It's true. I've called him before.
It's no good because can't hear what you know. It's
Well, anytime you're doing
there's
remote, you
delay.
can't see
Yeah.
and talk to people.
Things break up because
Yeah.
nobody's got a landline.
Yeah.
We don't even have one that works. And shares of Reddit are sharply higher because I only did 4. Company reported its most profitable quarter ever. Its current quarter sales forecast came in much higher than analysts expected. Reddit said it is seeing more active advertisers on its platform, and its efforts to attract more small and medium-sized advertisers are paying off. Why are you laughing?
As somebody said, my ear feels like 40.
40 things to watch?
Slow roll.
Here's
that.
the thing.
And I will admit, I
You
interrupted.
can't get everything you need with only 5. I've said this many, many times. You need at least 6 or 7. So
Well, we're going to have 6 or 7 right after the break. We're going to be joined by former U.S. Trade Rep Michael Froman on President Trump's new tariff rates. Do not go anywhere. An important conversation about where all of this whole tariff game goes next.
suspiciously.
Still to come this morning, much more on President Trump's new tariff rates for countries around the world. Squawk Box, we'll be right back.
President Trump signing a series of executive orders on tariffs hitting countries around the world with rates of up to 41%. They are set to kick in next week. Joining us right now is Michael Froman, former U.S. Trade Representative, now Counsel on Foreign Relations President. Good morning to you. I think the question of the morning is, effectively, is this real? Does it get pushed again? Is this a negotiating tactic? Of course, it's some kind of negotiating tactic, but does it have teeth?
Well, Andrew, if April 2nd was Liberation Day, I think August 1st is the day of reckoning, so to speak. It certainly came out with a series of new tariff rates. It's given countries until the 7th to implement them, because it does take actually some time to put these new tariffs in through the administrative process in most countries. But as you said, it could be that deadline could be pushed forward. My guess is there'll be a flurry of activity over the next week with countries trying to finalize trade deals and avoid those tariffs going into effect. But it is a clear signal that there's going to be a minimum tariff in this country of at least 10% and as high as 50%, maybe even higher for China, depending on how that truce ends. And we'll have to see how those all get implemented in the other countries.
But if you were a gambling man, do you believe that come next week, these actually will be implemented? I mean, I think that's been the fundamental question thus far, which is every time a deadline's been put on, there's been some form of an extension.
Yeah, look, I think a number of them probably will be put on. I think there probably will be some effort to kick down the road with those countries who the president determines are now negotiating in good faith and where there's some hope of reaching an agreement. But for a lot of countries, and whether it happens on August 7th or August 12th or even 60 or 90 days from now, I think the global economy and countries need to get ready for the fact that we're going to be living in a much higher tariff world. That is just the reality, whether it goes into effect right now or somewhat down the road.
And we've had a series of all-time highs in equities, Michael, and the bond market hasn't collapsed. And the economy hasn't collapsed. And we've had hardly any inflation, or at least we haven't had resurgent inflation. So that you would think if he really has always wanted to do this, he's more emboldened than ever to follow through, don't you think, watching the way the president operates?
Joe, I think there is that. What you said is absolutely true. The GDP figures are good. The inflation's ticked up a little bit, but not terribly significantly yet. There is a lag usually between tariff imposition and inflation of a couple of months. Some analysts think,
or the slowdown we could see in the labor market today,
or the
theoretically.
slowdown, and sometimes there's a lag there too of a couple quarters, and so it's probably not great to be complacent about it and to take today's data as what's likely to be the case in 3 months, 6 months, 9 months. But it certainly hasn't been as disastrous today as some people expected. And I think the reality is a lot of tariffs have been announced but not implemented, as Andrew said. And so it's going to take some time for them to be implemented and have effect.
So you think there still will be, and to the extent we have not seen a meaningful impact, you think an impact is still on the way?
I think it's very likely. If you're going to start imposing 10, 15, 25, 30, 50% tariffs on major trading partners, that has to get eaten somewhere. And it's going to get eaten in part by consumers or the manufacturers who import inputs from other countries, and their products are now going to become more expensive and less competitive. Or it's going to get eaten in part by the companies who try and adjust to that, and you're going to see that in profits. And so it's going to that has to be absorbed someplace and or be absorbed in part by other countries, and you'll see a global slowdown, and that will affect the ability of countries to buy our exports. So nothing comes for free. I mean, there's no trade policy is free. And there are always trade-offs, there are always costs and benefits, and while there may be a lag, I think we're going to see some down the road.
Okay, fair enough. Thank you. Appreciate it, Michael. We'll be back right after this. at 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. And boy, do we have a lot going on this Friday morning. Among the top stories, this is the biggie. President Trump modifying reciprocal tariffs on dozens of countries. These latest rates will kick in on August 7th if deals do not happen between now and then. White House officials telling CNBC that this is not an extension, but is going to provide time for the new rates to be implemented. Meantime, President Trump raising the tariff on exports from Canada from 25% to 35%. He extended Mexico's current rate of 25% for 90 days after a call with the country's president. President Trump saying Mexico had agreed to immediately terminate its non-tariff barriers, but didn't provide specifics on that. And we're watching shares of Amazon this morning because they're tumbling despite earnings and revenue that beat expectations. Current quarter guidance for the operating for the quarter coming in for the operating income falling short of estimates, and that taking it down a bit. And then we're watching shares of another big tech company.
That's right. Apple also in the spotlight this morning. Revenue grew by 10%. It was boosted by a 13% rise in iPhone sales. China sales have been lackluster in recent years, but they jumped by 4% in the most recent quarter. That stock right now is up by 1.6%.
Shares of the world's largest corporate holder of Bitcoin lower this morning. MicroStrategy is now known as simply a strategy, reported its best quarterly profit ever, well above the loss that analysts were expecting, reversing the year-ago loss. The company now holds more than 600,000 Bitcoins. Join us now, Michael Saylor, the company's executive chairman. 3% of all the Bitcoins that will ever be minted, 628,791. Owned by Strategy, but who's counting?
Yeah, thanks for noticing. We see Bitcoin as digital capital. The business model of the company is to accumulate the digital capital and then issue digital credit, like preferred stocks, against that digital capital in order to strip the volatility and the risk off of the Bitcoin and provide yield to investors.
And the latest preferred stock offering, it was going to be $500 million, and why not do $2.5 billion? It's still 5 times as much because of demand.
You know, my first IPO was $48 million in 1998. This year we did 4 IPOs for a total of about, the first was $500 million, $500 million, $1 billion, and this is the largest IPO of the year, $2.5 billion.
Like the tie, do you have, are they all orange now? Mostly?
We only wear orange ties.
You only wear orange ties, because I went to DC and didn't think about it and wore an orange tie. Every single person thought I was like advertising Bitcoin, and on, you know, I had a picture that I put out, and on Twitter I'm supposedly a holder. It's dangerous to do that unless you're Michael Saylor. I'll just say that.
The future is orange, Joe.
Unless it's Halloween, my wife's birthday. So these numbers were staggering. It's very arcane, very hard to understand. Are you basically just a leveraged acquirer of Bitcoin, and that's what your company is?
Here's the way to think of it. Bitcoin is a digital commodity. It's about 50 volatility, 50 ARR, and you want to hold it forever, a 50-year duration asset.
Okay.
If you want amplified Bitcoin, MSTR, the equity, is amplified Bitcoin. People want 2x Bitcoin exposure. The options jockeys love this. The derivatives traders love this. If you want structured Bitcoin, that's Strike, STRK. We give you like the 80% of the upside, and we give you 20% in a structured dividend, and then we give you principal protection. That's for people that would prefer to invest in hedge funds or S&P indexes.
But you're using the proceeds to buy more Bitcoin. You just keep adding on to how much Bitcoin you have. And your average price is what, 73,000?
Yeah, we'll sell a credit instrument like Strike, and we'll buy Bitcoin. So we're taking the volatility and the duration and the upside for our equity investors, and we're giving a structured instrument to the credit investors. Now, Stretch, which is our latest IPO, and I think the most exciting product, it's like treasury Bitcoin. It's for someone that wants monthly dividend, they want principal protection, they want the lowest volatility, they want a high yield savings account, and it kind of competes with money markets or with treasuries. And so what the company has done is we're taking this pure digital capital asset that's got a lot of performance but a lot of volatility, And we're refining it into securities that conventional investors can buy depending upon their risk tolerance and their duration interest.
Is there ever too much Bitcoin for you to own? Like if you could own all of it, would you?
I don't think we'll get all of it. I don't think in the range of 3 to 5 or 3 to 7% is too much. BlackRock is.
No, I just wonder. I was thinking about the mental exercise of if you could actually own all of it, like if you would even, bless you, if you would want it.
Well, you know, we started and we had very little, and Bitcoin was 10,000,
Yeah.
and now Bitcoin's more than 100,000, and 97% of the Bitcoin is worth 10 times as much, and somebody else, not us, has it.
Right.
So as a practical matter, what we're doing is we're monetizing and powering up this.
Oh, I totally get it. I just mean, if you
world.
owned all of it, would that change the entire behavior
We don't.
of Bitcoin?
Yeah, we wouldn't want to own all of
I
it.
wouldn't wanna-
We want everybody else to have their piece.
So-
The nice thing there is there's 160 companies that are capitalizing on Bitcoin in the public market, up from about 60 last year. So the Bitcoin treasury movement's exploding, and companies like MetaPlanet in Japan and Capital B in France and Smarter Web in the UK, and then there's a raft of them in the US, Anthony Pompliano's company, you know, and 21, they're all capitalizing. The big idea is I take digital capital, I issue digital credit, and a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us.
Sort of a philosophical question about treasuries, actually. And I don't know how much you believe in U.S. dollars these days, but the question is, if you believe that corporations, if you believe one day Warren Buffett, instead of holding
Well, maybe
300,
not Warren Buffett.
what?
Maybe not Warren.
Well, you know, instead of holding $300 billion of treasuries,
Cause of rat poison.
He would hold-
60 billion.
It's not going to be with Warren
he
Buffett.
would hold, that all these companies, instead of holding cash or treasuries, they would all hold their money in Bitcoin. If that were true, what would that do to the U.S. government and its ability to operate?
Well, I think the key to keep in mind is Bitcoin is demonetizing foreign real estate, private equity, public equity, other sorts of store of value assets everywhere in the world. 20th century physical analog assets are becoming 21st century digital assets. These companies like Apple and Microsoft, if they could buy the S&P index, they'd be better off. It's against SEC rules.
Right.
If they could buy each other's securities, if the Mag 7 could buy each other's securities, they would be better off. That's against SEC rules. The only security Apple can buy is Apple stock. And what do? They buy their own security. So, in general, if you're trying to create shareholder value, you don't want to park it in a fiat currency. You want to park it in a tangible asset. But gold and real estate don't make sense.
Did you ever see, we're talking
Bitcoin
about stable coins and treasuries having to back those. Could you ever see a day where they'd be backed by Bitcoin?
That's unclear to me. I think that the two dynamic trends in the crypto economy right now are the explosion of digital currency, which is what a stable coin is, backed by the currency equivalent, and the explosion of digital capital, which is what Bitcoin is, and Bitcoin is backed by energy, computer power. And I think the currency is short-term medium exchange. Like if you need money for less than 4 years, people are going to the currency. And Bitcoin is long-term store of value, 4 years to 40 years out. And so it's a matter of duration there.
The word stable and Bitcoin don't really go together that well. But when you say stable coin and you're talking about a fiat currency, that does not compute either. There's nothing stable about having something that goes down every decade. It's worth what? How much less every decade? It's that you're just sitting on a wasting.
Monetary theorists want to say that
2%.
Money's a medium exchange and a store of
Neither one of them
value.
are stable. So Michael, so how much of your Bitcoin on your balance sheet is worth, what, 75 billion?
On a good day, 72 billion
72.
today.
And what strategy market cap?
About 120 billion.
So you can issue stock because it's such a premium to what the Bitcoin you're holding. you can issue equity to buy more Bitcoin. It almost seems like it's
You know,
too good to be true. Almost. But
Well-
you need things to hold up. You wouldn't want it to sell at a discount to the Bitcoin you hold.
yeah, we announced in our earnings call last night that we don't intend to issue any equity at an MNAV of less
You
than
do
2.5.
even okay. Even and you consider preferred equity too, right?
What we can do is we can issue equity at a premium to Bitcoin, and we can also issue credit instruments.
Credit instruments.
So all of those are accretive. They all generate yield. What we announced last night is that our target MNAV is 4, and that means 4 times our underlying Bitcoin, and above that we'll be very active. From 2.5 to 4, we may be opportunistically active, but below MNAV of 2.5, we're only going to use equity to pay dividends.
So, again, it seems like there's quite a bit of possible horrific events if there was a terrible downside pullback. In the past, when we've seen the move from, take your pick, what we go, 75 back to 17, I think, not too long, or 65 back to 17. Are there nights where you're pacing and not sleeping and wondering about?
We lived through the $66,000 to $16,000 drawdown, so we have a PhD in leverage. There's 3 types of leverage. There's short duration margin leverage, where you mark the
You had
market.
some, didn't you?
We had a Silvergate loan, the bank failed. And so you don't want short-term margin leverage.
Yeah.
The second type of leverage is long or mid-duration bond leverage. That's better, but it's not great. We had some of that. We decided to remove that. And we've got some convertible bonds now. There's sort of that. The best leverage we've discovered is equity leverage. So issue preferred equity that never comes due, right? The principal never comes due.
Exactly.
And we've done $6 billion plus of that financing this year. That's Strike, Stride, Strife, and Stretch. So what I think is that if you're using preferred equity, you can lever up 30, 40, 50% because the principal never comes due. If you're using bonds, you want to be 20 to 30% because that way you can take an 80% drawdown. If you are in margin leverage, you just don't want to go there at all. And that's
Is the
normally what
person
the
on the
retail
other side
does.
of that trade in a bad situation? I mean, if this is a perfect trade for you, is the person on the other side who's got the preferred, who can never make it come due, are they in an equally good position?
The people on the other side of the trade would be Bitcoin investors that are getting principal protection, a guaranteed dividend, and the upside of Bitcoin. So that's
They
a
get the
benefit
guaranteed
to them.
dividend even if Bitcoin comes down below your strike price, below 76,000?
Strike is like 6 times over collateralized. So if you look at these preferreds, the weakest one is 5x over collateralized Stride. So they've got $5 of Bitcoin collateral for every $1 of principal at risk. So what we're doing is we're providing people seniority in the capital structure. If what you want is Bitcoin upside, but you want principal protection, you go for Strike. If what you want is a high yield savings account that pays 9% instead of 4%, and you're willing to accept 7-8% Bitcoin over collateralization, 7-8x Bitcoin over collateralization, you would do Stretch.
So Halloween, you still go with the orange, basically.
Well, now I've got a matching outfit. I know what to go with. Orange.
If we were to have a party, would you wear orange to our party?
Maybe. I'll wear some amount of orange.
Like it. Okay. Thank you, Michael Saylor.
Nice to see you, sir.
I understood more this time. How about you?
A little more.
80%?
I'm slow, so I got to listen again. I'm gonna have to replay it for myself.
Replay it at home.
Gotta ask ChatGPT.
Exactly.
Do some translation.
It's great when you're on set.
Thanks. It's great to see you.
Thanks for having me.
Okay, when we come back, a roundup of the other pre-market movers that we're watching. And later this morning, former FDA Commissioner Dr. Scott Gottlieb will join us to weigh in on President Trump's letters to pharma companies demanding lower drug prices. Squawk Box will be right back. All right, welcome back to Squawk Box, everybody. Let's get over to Dom Chu. He's got a look at this morning's pre-market numbers. Hey, Dom.
All right, happy Friday, Becky. Some big ones moving here this morning. We're going to start with shares of Reddit, which are soaring by roughly, call it maybe 15% or so right now after second quarter earnings came in better than expectations. Also, revenues way above analyst expectations as well. Global daily active users for the quarter grew by 21% on a year-over-year basis to roughly 110 million users. Now, CEO Steve Huffman also highlighted the company's AI-powered answers tool, which now has roughly 6 million weekly users. Those Reddit shares are up, by the way, almost 450% just since its IPO last March, so a big move for Reddit. Turning now to shares of Coinbase, opposite direction here, plunging by more than 10% right now after its revenue fell short of estimates. Gains in the crypto exchange's subscription revenues failing to offset weaker trading volumes during the quarter. Shares are still up roughly 35% or so this year, so Coinbase down 10%. And we'll finish with a check on Roku, down by about 5% right now, despite reporting an unexpected gain for the quarter and better than expected revenues. They also announced a $400 million stock buyback program. Now, analysts at Wells Fargo were pleased with the results. They upped their price target on the stock to $113 from a previous 100. That's pretty much an implied 20% upside from yesterday's close. So keep an eye on Roku. And by the way, for more on those and other top calls of the day, just head over to cnbc.com/pro. Subscribers, as always, get all the access to the detail and analysis behind those big upgrades and downgrades. Becky, I'll send things back over to you guys.
Dom, thank you, and we missed you yesterday.
I missed you guys too.
Saying your name yesterday, and you weren't.
I was thanking you for being here when you weren't here.
Oh, I'm here with you guys right now, and I'm happy always to be with you guys.
She
And
called.
you're always with us in spirit.
She called Frank Holland, Dom,
Because
and
it's
he.
an impromptu.
But he took great offense. So you should really talk to him about that. Say, Frank, what's your problem?
We're all going to smooth things over. We're going to smooth things over.
Well,
He was
everybody-
irate.
Everybody likes to be recognized for who they are. Thanks, Dom.
Coming up.
You wanted me to call you Contessa.
Yeah, thanks, Contessa. Investor Mitchell Green is looking to back companies that are using AI to boost performance. Going to share his list of AI adopters after the break. And we're waiting for the July jobs report due at 8:30 a.m. Eastern. Squawk Box.
Time now for today's Aflac trivia question. What is the only letter in the alphabet that does not appear in any U.S. state name? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. What is the only letter in the alphabet that does not appear in any U.S. state name? The answer? Q.
Here in any U.S. state, yeah. Yeah.
I'm familiar with cues.
Yeah, you are. Quick and Quail, and yeah. Alibaba is taking on Meta's wearables with AI glasses of its own. It's the latest in the U.S.-China battle for AI dominance. Joining us now, Lead Edge Capital founding partner Mitchell Green. Mitchell is a longtime investor in Alibaba and Ant Group. He's also an investor in ByteDance, and he does crazy things sometimes when in a chair, right?
The real question will be, how many years do I get to come on here until we have a bite? Till I get to come on for like the ByteDance IPO? That'll be
That
that's
is
the
a good-
$1 million question.
Looking at a lot of your thoughts and comments, I think you're very excited about AI and what can happen. But would you buy any of the top tier leading AI companies at this point? And is there a way to engage in this transforming?
What's going on?
Yeah, is there
It's
another way? Where else can you do it if you don't
It
want?
is clearly transforming. I mean, all your viewers.
But you wouldn't buy any
I'm
of
sure.
them. You wouldn't buy any of the main.
We're not buying. I think the way you play it, especially if you're a retail investor, you should go buy the hyperscalers that you can see are putting up. They're going to dedicate massive amounts of capital to this space. Whether it's Facebook, I think Amazon said they're going to spend $60 billion or something in the second half, and spent $56 billion in the first half. I think Google said they were going to spend $85 billion or something. We really don't know how you compete against those giant hyperscalers, and the cost to serve a search with with Anthropic or OpenAI versus Google, who spent the last 20 plus years.
Do you think they become the winners of this?
We think they're the
And you think, therefore, where do you put it? So some people are saying they want to get access to like an OpenAI, and they would say the way to do that today, oddly enough, would to say either to buy into Microsoft, right? Because embedded in they have a big investment, is in OpenAI, or into SoftBank. Those are two public, effectively, vehicles.
SoftBank can get a lot of other stuff. Look, if you're a wealthy enough individual, it's been rumored that both Anthropic and OpenAI, actually these companies are constant fundraising companies.
Yeah, of course they are.
Which also means you're going to get diluted. We have not invested in the big models. And by the way, we're idiots. We should have. We could have invested in some of these early. And again, you could sell the stock. I know people that invested early and have already gotten out and made a bunch of money. Our concern is, we could be completely wrong, is that how do we know these aren't Excite, Lycos, and AltaVista? Search engines from the 90s that had massive consumer trends. You might argue, I could take the side of the argument, that OpenAI is dominating the hearts and minds of consumers. The DAUs and MAUs are just through the roof, so they'll win. They can attract the best talent. Here's the problem: the likes of Facebook, Microsoft, and Google, Amazon are paying engineers like they play in the NBA, and so the amount of not only that OpenAI can offer equity, but these companies can offer hard cash. What they did with what Facebook did with Nat Friedman, who's a dear friend of our firm, an absolute rock star engineer. But the dilution for these companies, it's something that a lot of people in Silicon Valley, people don't talk about enough. The dilution at some of these private AI companies is absolutely insane.
That's interesting.
Nobody talks about this.
Yeah, nobody really does.
Warp, while the biggest, some of the best innovation is coming out of Silicon Valley, and it's for the last 20 years, and will continue for a long time. The amount of stock option dilution that at the same time also comes out of this area is absolutely just remarkable, would be one way to put it.
That's how
But
they're
it's good to be
that's
an
how they're
engineer.
That's how they're holding on to the talent, not because they have a more open workplace and we're going to let you do what you want and all these things. No, it's that you get to own a big.
You get to own a piece of the company. And the crazy thing is, never before have you seen really the amount of dollars that are being given to some of these AI.
It's more than 100 million, right? That's the headline we.
Some of these numbers
Some of
are
these numbers
absolutely
are multiples bigger than that.
Well, they're like NBA players.
Yeah. Right.
Right. A lefty with a good. They can also hit.
Tell all your kids to become they're in college to become AI engineers.
But it's still it's not something you would assume that instead of buying the companies that are going to be selling into all that capital expenditures from the big bank. Haven't you buy the bank?
Buy the
buy the
banks,
people that are actually spending the money instead of the ones that are benefiting from supplying the
They're just
the
giving
stuff
money,
to
not
them.
stock.
Yeah.
They're giving money, they're not, and
That's
look
enough
at
of a
the
reason.
growth. I mean, it is crazy. We're sitting here today, and after yesterday's earnings pop, Facebook is a $2 trillion company, growing. What did earnings grow yesterday? I think top line grew like 20 or something like that. So not only are they seeing they're making investments, but they're seeing margins increase as well. But, the DAU count at Facebook is absolutely incredible. I think the best way to play AI is go buy the big hyperscalers yourself. And they're not crazy expensive on an earnings
Just
multiple.
trying to see how do they use AI to leverage. I guess that everyone uses it differently to
Everyone
leverage
uses
their
it
own business, their business.
Okay, here's a question for you.
Sure.
Who pays down the road? Like what are the iterations? Because this stuff is really expensive. I heard recently that there's a healthcare company that doctors work for, that this healthcare company wants the doctors to pick up part of the expense for the AI agent to make them more efficient. And the doctors are mad, obviously, about what happens with this. It gets to that question of who does pay for
At the end of the
the
day.
expense of bringing the artificial intelligence on board. It's not cheap. It's going to hurt margins if you don't have a way to offset it.
And some people could argue it's going to be commoditized.
Yeah.
Well, you might argue, how has Google become the cash printing machine it has? The advertising business, obviously. Who pays for the ads? At the end of the day, it's probably consumers. Although on the flip, you could argue prices. That means prices should go up and things like that. I think people always overestimate technological change in the near term, and they always underestimate it long term. We just believe this is like the internet bubble all over again, where this stuff is going to completely revolutionize the world over the next 20 years. It's just we are probably still in the 1999, 2000.
And then the question is, how do you pick the winners and losers now? Because it was not clear then.
It was not clear then, which means it's probably not actually clear now. I do think there was another interesting thing. So I was with a retired CEO earlier this week of a large consumer goods company, and he's on the board of a bunch of big companies. And I asked him, "Are you now starting to see, like the AI? They'll get board report. Are you now starting to see, like real ROI from some of these AI projects, like internally?" And he said they are now. It's some of the boards he's on in dribs and drabs. Not widespread yet. They are starting to see like real ROI with this stuff.
Do you think the market follows suit, and if we're 1999, that there's a 2001 coming?
Everybody sure seems bullish. And one of my dear friends, Steve Cohen from Point 72 and SAC, always says if you ask 10 of the smartest hedge fund managers or go ask 50 people on the street where the market's going, and if 48 of them say one thing and 2 says the other thing,
Go with the 2?
go with the 2. And if you do that over and over again, you'll probably make money. It just seems that, as Ed Gardini has said, the market just keeps grinding higher. I don't know. And I think what will make it pop is something that I have no clue what it is. I don't know. It just seems like we're a little complacent.
Jesse
right now.
Livermore said it before anyone, and he still jumped. I think.
Yeah.
All right. Thank you. I don't know if he jumped. He did something to end everything early. But,
Coming up, it's in the book, 1929.
what was his
Thanks
real
for the
name?
tease.
Edward Lefevre.
I'm not going to tell anybody what happened.
Everybody knows
And
what his
the-
real name is.
Oh,
But it
yes.
just what Edward Lefevre.
No.
Oh, his real name was Jesse Livermore, and he wrote on his pseudonym.
No. Edward's a real person who wrote the book about him. That's what actually. But a lot of people think that it was really
Can
him
you
who
tell
wrote
me
the
how
book.
he offed himself?
I'll tell you during the commercial break. Check out shares of Moderna this morning. The company reported a narrower loss than expected. Revenue fell 41% over the prior year to $142 million, but that was above estimates. Moderna lowering the high end of its sales outlook for the full year, and that's due to the timing of deliveries. The stock, we should mention, down more than 5% in early trade, just a little over that right now.
All right, all-time high? Who wants to give it to me?
Oh, goodness.
700?
464.
464. I looked it up yesterday and I forgot.
464.
It was 2021.
What's-
2020, 2021.
Stocks are much safer than Bitcoin, just so you know. 464 to 28.
That's why most people say invest in the S&P 500 or a broad
No,
range.
but you know what I
Not
mean.
that the S&P 500 didn't drop to
Look,
666.
Gordon Gekko said it.
in 2008.
It becomes, perception becomes reality.
All right, when we come back, President Trump is giving pharma companies 60 days to cut drug prices or face consequences. Former FDA Commissioner Dr. Scott Gottlieb will weigh in right after this break. And later, don't miss our exclusive interview with Exxon CEO Darren Woods. Squawk Box will be right back.
BC Plus.
All right, President Trump ordering pharma companies to lower drug prices in the United States over the next 60 days. Joining us right now to talk about this and changes at the FDA, plus much more, is former FDA Commissioner Scott Gottlieb. He's also a CNBC contributor and a board member of both Illumina and Pfizer. And Scott, let's talk through what this might mean. This is a strict letter. President Trump tried to do this in the first Trump administration with an executive order that the courts struck down. How likely is this to get some pickup from the industry? Do you think they'll go along with it?
Look, I think this is a good starting point for the industry to have discussions with the administration. The president clearly is focused on this issue. He has been through 2 terms right now. This sense that there is unfairness between the United States and our Western allies, mostly in Europe, who are paying much less for pharmaceuticals in the U.S. I think it's a fundamental issue of fairness for him. He tried to do this through a regulation in the first term, through a demonstration project at the Centers for Medicare and Medicaid Services. That was struck down. In the second term, he's begun to try to do that again. I think this may be an indication that they're having difficulty coming up with a regulatory framework that's going to pass judicial review. And so they're looking to do it through negotiation and a little bit of jawboning. I think this is a good starting point. They recognized in the letter that the president put out that this should apply prospectively, meaning that companies can't go back and renegotiate the prices that they've already established in a lot of these countries. So he's saying that he wants companies to do this on a prospective basis, basically for new drug launches within the commercial and the Medicare market. The one piece of this I think is going to be very difficult for the companies is that he wants the companies to offer the MFN price, the most favored nation price, day one within the Medicaid program. That's not necessarily going to benefit patients. It will benefit states by lowering their drug spending, but that's going to be very difficult in terms of the revenue hit to companies. In many cases, the difference between the MFN price, depending on how you calculate that, and the letter doesn't specify that, and the prices paid in Medicaid could be substantial for some single source drugs. Ultimately, and my final point here would be, I think we need to move towards some type of tiered pricing globally, where you basically price drugs based on the wealth of nations, and you have different prices for low, middle, and high income nations, because a country like Germany with a GDP per capita of 54,000 per person can pay a lot more than Vietnam with a GDP per capita of 4,000. So I think we do need to price public health goods to what countries can pay and their wealth ultimately. But this is a good starting point.
That sounds like something that the United States Trade Representative would have to enforce. Are you suggesting that what we get out of this is not lower prices in the United States, but higher prices in other developed countries?
Well, I think it's both. And the president, in those letters that he sent, was very clear that he wants prices in the U.S. to come down if prices in Europe and other nations are going to go up. And they did commit that the trade representative and other entities within the U.S. would support companies. That's going to be critical. There was a moment in time where we tried to negotiate some of these provisions into free trade agreements. It got into the FTA with Australia and South Korea as well. I think we need to go back to that, where the U.S. trade apparatus is willing to support companies that try to push back on some of these pricing authorities globally. But the president was clear in the letter that he would expect that if the United States does support manufacturers in being able to raise their prices overseas, that would mean lower prices in the U.S. Now, ultimately, how you measure that would be difficult, but I think there are ways that you could probably look at that over the long run. But I think in terms of where the administration's position has been and what we knew the president wanted to do, there were some things in this letter that I think were some thoughtful, frankly, concessions on the part of the administration, particularly that provision about looking at this mostly on a prospective basis for new drug launches, with the exception of within the Medicaid program. The one piece of this I think could immediately impact consumers, and the industry has been having discussions with the administration about this, is offering some kind of portal, some kind of online portal, a direct-to-consumer portal, where companies would agree to sell to consumers directly, for those who are underinsured or uninsured, drugs at MFN-type pricing for heavily rebated drugs. And in those instances, probably the ex-US prices are pretty close to the US-based prices once you factor in all the rebates that are paid in the US. And so that's something that could provide some immediate savings to certain consumers.
That might work. Scott, I'm just trying to historically figure out how we got in this mess and who's to blame. I mean, the first time someone over in Europe suggested that they were going to start controlling prices, who went along with that? Was our government asleep? Or FTC or trade regulator? Did the companies just allow themselves to be taken advantage of just to continue to be able to sell abroad? Or how did we let this happen to us, so now we're in this position. It should have never happened in the first place. How did it happen?
Yeah, I think it's a little bit of all the above. U.S. authorities let other countries put in place these price control regimes and didn't support manufacturers in pushing back against those, and it's hard to do if you're a private company.
Whose administration was that? When was that happening?
Yeah, when did this favor?
Yeah, I mean, that really happened over, I would say, the late 1990s and early 2000s. A lot of these regimes went in. Some of them went in earlier than that. If you look at countries like the UK, Germany started to put these really draconian provisions in place probably in the mid-2000s. But the bottom line is, if you're selling a pharmaceutical product, number one, you want to price it to what the market can pay, because these are public health goods. And also, these cost very little to manufacture. That's just the bottom line. The cost of goods is very low, and so if you can still eke out a profit in Germany selling it at 50% of the price you can gain in the US, that's still profit to be had. So companies are going to try to sell as much as they can to as many countries as they can based on what those markets are willing to pay. I think if the USTR is willing to step in here and really support manufacturers in pushing back against some of these regimes and make this a component of how they negotiate overall trade agreements, the U.S. administration, I think we can make some real progress here. And I think this letter, frankly, was a good starting point. I was surprised yesterday by the negative reaction in the markets relative to where the president has been. This is no surprise. And I think they did make some thoughtful movements here, the one being looking at this just on a prospective basis for most drugs. That's going to allow companies to go into these markets now and say, we're launching this drug at a world price, take it or leave it. And then you're going to need the support of the U.S. government to make sure they don't compulsory license that medicine.
Scott, let's switch gears. We had Dr. Marty McCary here, the current head of the FDA, earlier this week. One of the things we brought up with him is what's happening with gene therapy, other innovative therapies and drugs that are out there, because there have been some concerns, particularly around what we saw with Sarepta. What are you hearing?
Well, look, there's been about 4 recent situations with respect to gene therapy in particular, and things that went through that biologics center where you saw a recent departure of the head of that center that surprised not just, I think, the markets and consumers, but also the companies. And you saw them put out statements, and I think you referenced this in that interview, where companies, the CEOs said, we were surprised, we felt basically the rug was pulled out from us at the 11th hour. You don't typically see companies come out and make statements like that unless they really think the rules were changed on them. I think the larger story here has been just the degradation at the agency in terms of departures. That biologics center has seen 106 departures since the beginning of the year. That's on top of about 150 RIFs that were also part of that center. If you look at the drug center, they lost about a third of the reviewers that review breast and gynecological cancer products. They lost more than half of the group that reviews malignant heme products. They've seen 473 departures of medical reviewers, voluntary departures, on top of about 600 RIFs. That's more than 20% of that center. So you're seeing a hollowing out of the scientific staff at the FDA, and that's starting to impact early reviews. When you talk to the companies, and I do talk to a lot of small companies, I work at a venture capital firm, they're starting to say that the feedback that they're getting from the agency and their ability to engage with the agency, have meetings, are not as robust as they used to be. Things that used to be meetings in the past where you'd get verbal feedback now are written response only and things like that. Bio actually did a survey of its members and they quantified this. They haven't put out the results of that survey yet, but they're quantifying on a systematic basis that the quality and the pace of the interactions that early companies have with the agency has gone down, which is not surprising given the scope of the departures and the firings that we've seen at FDA. It's going to have an impact. So there's rebuilding to be done right now at the agency.
Vinay Prasad leaving, does that improve the situation? Does it change the situation, or is it too late because these people have left and it's going to take a lot of time to rehire among those ranks?
Well, I think it's going to improve morale if you talk to people within that biologics center and how they felt about the leadership composition within that center. And it's going to, of course, depend on who they get in place. There's discussion that, that Kennedy, Secretary Kennedy, was supporting Vinay Prasad, and part of the concession that was made in terms of getting Kennedy to agree to his departure was that the vaccine group would be split out from the biologics center and they would appoint a new head of that vaccine group, presumably someone who shares Secretary Kennedy's views about vaccines. I think that would be very destructive to the agency and further erode morale. So things like that are allowed to happen, where you get people who are anti-vaxxers, for example, to oversee the vaccine division. It doesn't just affect vaccine review, it affects the overall morale in the agency, where people in the agency who are scientists who are dedicated to the public health mission of that organization feel that there is political meddling and intrusion in the decision making, and that they can't exercise their scientific judgment because there's sort of preconceived notions about what the outcome should be. And that's a feeling that's permeating that agency right now when you talk to the rank and file. So I think we need to get back to basics with FDA and try to support the scientific decision making of the staff and support recruiting good people into that agency and retaining them.
Dr. Scott Gottlieb is the former head of the FDA in the first Trump administration. Scott, thank you for talking this through with us. I know this is a conversation that will continue. We're watching it closely, and I know you are too. Thank you.
Thanks a lot.
This is not England. Anyway, still to come, and we're counting down to 8:30, but you know what I mean. Still to come. We're counting down to 8:30, and the release. We've had so much other things to talk about.
I think
And make it count.
Coming up, robot shares have been on a tear, closing yesterday's session at a record high. The company's CEO is going to join us next. First on CNBC interview after this.
now.
That's
Welcome back to Squawk Box. Shares of Roblox, they have soared and were soaring yesterday, up, by the way, now up another 10% after the gaming platform beating earnings expectations. Engagement numbers also raised its annual forecast. Joining us right now is Dave Baszucki. He is Roblox's CEO, known as Builderman to me, though you don't really do the Builderman thing, I don't think, as much as you used to on the platform. David, it's good to see you, sir.
Great to see you, Andrew. Thanks for having me on.
So you blew past these numbers. You know, you guys have talked a long time about, you know, trying to do 20% a year. This is a whole nother level. What's happening, and what should investors be able to expect going forward at this point?
We've been sharing for a long time. We want to reinvent the way people build and consume games, and that there's enormous area for technical innovation in how creators can build games on our platform. Recently, we've seen more viral hits. Last summer, we were talking about Dress to Impress. This summer, we're talking about growing a garden, which I love. There's several gardeners in my own family. And we recently hit all-time highs, not just for Roblox, but for gaming around the world as a whole. A few weeks ago, Grow a Garden had over 20 million people playing at the same time, which makes its way into the Guinness Book of World Record. So we have amazing creators on the platform. It's not just Grow a Garden. There's over there's 5 experiences right now on Roblox that have 10 million people playing them every day. So it's part of our vision, which we've been saying. We believe there's an opportunity to reinvent how games are created, and we think someday 10% of global gaming content will run on Roblox.
So how much? I mean, I know about Grow a Game. I have a daughter who plays Dress to Impress. My question to you is, how hit-driven do you think your business is, and what do you need to do to the extent you want to create a consistent, not hit-driven business, just to make sure that the creators consistently come onto your platform and keep creating the hit games?
Yeah, I want to note that although hit-driven, even without Grow a Garden, our year-on-year growth would have been well above 20%, which is really great. And I also want to highlight all of the technology we're building on the platform, in a sense, is somewhat metaphorically similar to Grow a Garden. We're creating the great conditions for new viral hits to emerge. So that's why we raised our guidance. It's why we've shared that there's genres on Roblox like sports, like racing, like role-playing games, that we think with our continuous innovation and technology, we're going to see that growth as well. So we don't control the hits, but we do control the light, the fertilizer, and the watering for these hits to emerge.
So, David, Morgan Stanley came out with a new report. They, by the way, raised the price outlook in a big way, and they said that you are, quote, the next major entertainment platform. What do you think that means? I mean, I think a lot of people think of an entertainment platform as Netflix, perhaps. That would have been probably the last big one. But if we were to talk a couple of years from now, what do you think Roblox looks like, and how much mind share and how much time, if that's what you're competing for, time, do you own?
Well, we own a fair amount of time, and what's really fun and interesting about the time on our platform, which was over 9 billion hours spent per month, really, in the last quarter. That time is not solo time. That's not time scrolling at night with short form video. That's time being with friends, and that's playing hide and go seek, or dressing up, or growing a garden. And so when we talk next entertainment platform, it's next social entertainment platform. It's a platform where you're together, where you're not lonely, where you're chatting about things with your friends, where you're doing things together. But we do believe this. There's a lot of room here. Once again, we're roughly in the 2.5% to 3% of the global gaming content space. We're on a mission to have 10%. So there's a lot of opportunity for growth. For example, in our last quarter, our over 13 DAUs grew at 64%. And that's an area where we're a lot less fully penetrated right now. So we think there's this 10% mission is really something we can achieve.
Well, you're the closest thing to the real version of the metaverse. My question before we go is, I saw something where you said recently that you could imagine a dating feature where people are paying effectively. I mean, where people would be, I mean, you talked about communicating and chatting, but if people are going to start paying to have a dating feature, there could be all sorts of features like that, I would imagine, over time.
Yeah, and once again, this one obviously creates a lot of excitement in the news without fully explaining it. Look, we have ID requirements for 17 and up experiences. We're very thoughtful about who can communicate with who. But for those users who we really know are 17 and up, there's an opportunity for people to connect on the platform.
Why not 18 or up?
The way we would do dating is the way we do things in every other country, which is what is the typical norms in a country. So if we decided a dating app was 18 and up, we'd of course do it that way.
Well, 18 is legal.
I can think of some countries, you don't do it for 13, I don't think they're, just saying.
I don't think we would ever have a 13 and up dating app in any country anywhere in the world, but appreciate your guidance on that.
The news every day.
We got to jump only because there's some news coming out from the Fed, but we want to thank you for joining us. Congratulations on a remarkable quarter, and we'll keep following your progress and look forward to talking to you.
Thank you all. It's been great to be here. Thank you.
You bet.
Thank you. In fact, that news just out from the Fed is on the Fed governors who dissented at this week's meeting. Steve Leisman joins us right now. He's got more on that front. Hi, Steve.
Hey, Governors Waller and Bowman continuing that tradition of explaining their dissents on the Friday after the meeting. And they're both saying why they wanted or preferred a quarter-point rate cut. Waller saying that tariffs are one-off price increases and do not cause inflation, echoing speeches he gave before the meeting. He said standard central banking practice is to, quote, look through price level effects. A host of data, he says, argues that monetary policy should be close to neutral, not restrictive. He cites GDP at 1.2% and the idea that expected to be softer for the rest of this year. He says inflation is close to target, quote, if we put aside tariff effects. And he believes they'll be temporary. Both he and Bowman are going to talk about that, this idea of an ex-tariff inflation calculation, including expected data revisions. Payroll growth is, quote, near stall speed. And there's downside risks to the labor market, and they have increased. And we should not wait until the labor market deteriorates before we close. And if we could just go right away, by the way, to the Bowman comment, she makes very similar remarks regarding this, where she says inflation has moved considerably closer to our target after excluding temporary effects of tariffs. Economic growth has slowed markedly, she says. Labor market showing increasing signs of fragility, and a neutral setting for policy is the right way to go. I'll leave it there, guys, except that she also says that a cut would have hedged against this weakness. So making cases, there are economic cases for cutting that are not crazy. There's some logic to it. And it's just a matter of this idea of tariffs being one-off price increases that the Fed should look through now, and how much real weakness you see in the labor market.
Well, and that was Joe's point. We're going to get a read on that at 8:30 with the jobs report. If there's more weakness in the jobs report than anticipated, that would bolster their case.
You would still read Larry Lindsay when he publishes them. I'll send it to you. Larry Lindsay, the
Yeah, once in a
economist.
while. It's not all the time.
It was just pretty interesting.
Smart guy, though.
Very smart, and talking about the surprise drop in import prices and how that works. Pre-tariff, when you exclude tariffs, even though service imports were up, you would think both of them would have been up because of a weaker dollar. You would think it would look good. And his point was it almost looks like exporters at this point are eating a lot of the tariffs, which is the whole idea of that in a perfect world, that's what you would hope would happen, right? Yeah. And then you could actually say that the countries are actually paying the tariffs.
Joe, can I just give you a comment that we got? We do our CFO council meeting. I do a briefing to our CFOs every time before the Fed meeting. If you want to join that CFO council, you can listen to that briefing.
When is it?
It's at 9 o'clock. It's with the Fed survey results. So we give them a briefing on the Fed survey
in the
results.
morning.
After we break it here on Squawk, we do it to the CFO council.
At 9 a.m.
9 a.m.
That's like nap time.
Right away, right after the show. Boom, you're down. Okay, but here's the thing. One of them said to me, do you really think our suppliers, our distributors, have 15% of extra margin to give Are we really that bad in
Steve,
terms of
it's
looking
not on
for
the, it's not on the
lowest?
It's not on the price. It's not on what they're selling. It's on what's coming in. So if their markups are 300%, 400%, it's only on the wholesale price.
Whose
But
market?
it still hurts your margin.
Who's
It
market?
hurts it a
Who's
little
market?
bit. Like, okay,
It may not be
the tariff
Who's
is on the
market?
wholesale price that the retailer is
Okay,
bringing
so
in.
if you
right?
are a high
so,
end,
so if
you're
you're,
a
I think you're missing my
bringing,
point.
no, if you're
Sorry.
bringing in something for $3 and you
Right.
get a 15% tariff, and then so what's that? $3.45,
Right.
and you're
Right.
selling it for $25 or whatever.
But the thing is, it's going, that's not a big deal
Minuscule.
if you're an Hermes or somebody who's doing it.
You're talking about the highest
You're
margins
talking
ever.
about
$3.25 is the craziest margin I've ever.
That's
The
gonna
point
be-
I was trying to make is just the Chinese
Someone I know
supplier
that
or the what does where
High-end
where is it
stuff is
15% now? I don't even know. Let's say Europe or whatever. Does the European supplier have 15% of extra margin to give to absorb the tariff? That's what this person was saying. Now I've always maintained, Becky, that there are 4 points along the chain that could absorb some of the tariff.
Right, which means each of them is going to take a little bit of the hit.
Right.
That's better. But if you're talking about grocery stores where your margins are 1 to 2%,
Nothing.
That's tough.
On the, that's all the way at the end of the chain.
Yeah.
There's the exporter, there's the importer, there's the retailer, any one of these things. Plus, Joe mentioned currency can also absorb some of this.
that has
There's a
helped
lot of
us.
places.
Dollar's been weaker.
There's a lot of places. But you also see, interestingly, in Bowman's comments, who said, if you take out the tariff effect, we're at 2.5% or lower PCE inflation. So she's telling us there's 0.3 percentage points at this point of inflation from tariffs.
So you
Is that a lot? Is that a little? Is there more to come?
So if you had a weak labor market and you got all this other stuff, you should cut.
If you feel confident that what's happening in inflation is not going
down the
to.
road because
Right.
the Fed's main road is
Listen to
goal is
Becky
to
quick.
make sure they keep inflation from getting out of
Right.
control.
Well, it
Except
might-
that clearly the president thinks that,
I'm not
he's
talking about
gonna
him.
create,
I'm
that, he's
thinking
gonna,
of-
that he's about to create a problem.
I think, right.
I'm going to walk off and let you guys
But
argue
he
amongst
thinks,
yourselves.
he thinks that the problem will pay benefits in the long term, obviously, in a lot of them.
Darren Woods is waiting for us. So
Joe, I'm playing Unbroken Chain at Jerry Jam this weekend. We're
You can play
celebrating
it?
Jerry Garcia.
Who sings?
I sing it.
You try to be Phil Lesh.
I really work hard on those vocals. He's such a genius. He's such a
I
genius.
can
maybe
imitate
Joe can
him.
help.
Yeah, we'll be
Well,
at Jerry Jam out on the
Not
island.
a genius anymore, but
Celebrating Jerry
Thank you.
Garcia. I think his birthday is today.
what's the
right?
creature?
Happy birthday.
Happy birthday, Jerry.
The creature.
You know, it's about his dad dying of cancer.
Oh,
That's what the
That's what the song's
creature.
about.
that's terrible.
What is that sound?
Oh, no, sorry, that's Boxer Rain. My bad. That's
What's
Boxer
that?
Rain. Boxer.
You know how they did that?
No, but I remember when I was in high school, we listened to it over and over and
Great
over.
song.
now and make it count.
Welcome back, everybody. ExxonMobil beating earnings and revenue estimates for the second quarter. That stock right now up by about 0.5 percentage point. And joining us in an exclusive interview is ExxonMobil's chairman and CEO, Darren Woods. Darren, first of all, thank you for being with us today. It's good to see you.
Good to see you too, Becky. Thanks for having me on.
Okay, so let's jump into the numbers here. Earnings have come down for all of the major oil companies. That's because oil prices have come down pretty substantially, but production has increased substantially, and that's probably why you beat expectations today, I'm guessing.
Yeah, if you look what's happened, you're right. As commodity prices move, everybody moves with it. Low tide, all boats fall, and high tides, all boats rise. One of the things that we're real proud of, if you look at the impact that pricing have had on the drop in earnings, we've offset more than half of that with improved production, a better mix of production, higher value products, and significant structural cost reductions. And so the things that we can control, the business is delivering on and having a really positive impact on our earnings. So as the market kind of moves up and down, I think we're offering a very stable, consistent value proposition to our investors and our shareholders.
Where do you see oil prices headed over the next 12 months? I know you don't have a crystal ball, but you guys certainly have a better idea than we do.
Well, I would say if you look first at the demand side of the equation, demand is very strong around the world. So very good demand for transportation, fuels and products, crude, high demand for chemicals. The challenge has been supply, which has been putting pressure on pricing. OPEC continues to unwind some of its production, and so as you look going forward, depending on what happens with demand and depending on what happens, frankly, with who's all out in the market producing with respect to some of the national oil companies, we could see the market go longer in the back end of the year. Frankly, we're prepared for that. If you look at where prices are at today, they're higher than the basis that we had in our plans as we developed our go-forward investments. And so we're prepared for a lower environment. We expected a lower price environment, and there's potential that could manifest itself at the back half of the year.
If that happens, I guess you're saying that the dividend is safe, the share buybacks are safe. Just that's what investors are worried about. If you've got a strong balance sheet to make sure.
Yeah, we are. We tested. We do the plan. We have an outlook on price. We recognize that we can't predict where prices are going to go. We always, as we develop our business and investment scenarios, test them against some extreme cases. We ran our plan through a scenario that frankly had pricing that was worse than COVID, and we had a very robust financial situation there. Obviously, we're always going to meet our dividend and can continue with our buyback program. So we feel very, very confident that today and for any reasonable forecast of where prices could go, that those distributions are very safe.
Okay, I mean, that's like stress testing, your own form of stress testing like the banks do too.
Absolutely.
Darren, let's talk a little bit about the Hess arbitration, because we haven't had you on camera to talk about this since that deal went through a couple weeks ago. You lost an arbitration. What happened? Was that a huge shock to you, the reading that came back?
Yeah, I would tell you we were very surprised. I think as you and I talked about that morning, I was surprised. If you remember when we talked about this in the past, Exxon negotiated and co-wrote with Shell the agreement, the operating agreement for Guyana. We understood the intent of that document, and we firmly believe that the language in the document conveyed that intent. As we went into the arbitration, we went back to the folks who negotiated. We went back and talked to Shell about it, had them review the language and our position on that. We engaged third-party lawyers and experts in the industry, and literally all those folks that we had review the language and our position reaffirmed that we had the right, and frankly that we would prevail in this challenge. So we were very surprised when it came out. If you read the finding, they state we had a reasonable commercially valid position. But in the end of the day, they sided with a more narrow interpretation of the text. It is what it is. We're moving on from that. That morning, I reached out to both Mike and John and congratulated them on the win. Obviously, it wasn't something that we were looking for, but I think it's time to move forward and continue on the business. As you know, the implication for us, frankly, is that Hess moves on and Chevron takes Hess's place. So our operation with respect to Guyana is unchanged.
Yeah, I spoke with Mike Worth about it last night. He talked about how they've been able to hit the ground running because they had more time because of that arbitration to get things ready to go. They're going to be doing the synergies they'd anticipated in the first year in 6 months. I asked him actually if he was grateful to you for slowing that down so they could be ready to hit the ground. He said no comment. He did chuckle.
Yeah. Well, that was probably the nicest thing you could say, so I'll take it.
Well, it does bring up, you guys are partners not only there but in other places. He said partnership is core to Chevron. I know you have said similar things. Will it, you guys have been competitors for forever, I guess going all the way back to Standard Oil over a century breaking up. How do you get along with those situations? Will it work in Guyana and other places?
Yeah, I think maybe one of the factors that's not appreciated for our industry is it is fierce competition in a commodity business. It is hard knuckle competition, which I think is good. It makes all of us better. But at the same time, we're partners all around the world, and so I think what's very different for other industries, you have to learn to walk in balance between, on the one hand, being partners and working closely together, and on the other hand, fiercely competing. And I think the industry has a very, very long history of successfully doing that. If you look at how our organizations work together, both with Hess and Chevron throughout this arbitration, a really good collaboration, continued excellent partnership and working everywhere we do business around the world together in our ventures. And so I'm confident that that's going to be the path that we go forward on. We're all aligned on we want to make these ventures successful, and so I have no doubt that we'll continue to have a constructive partnership and continue to work together to grow value all around the world where we're in partnerships and joint ventures.
Hey, Darren, the EPA is proposing to revoke that 2009 endangerment finding, which, put like carbon dioxide, ubiquitous gas trace amounts, put it in, it actually classified it as climate pollution that was dangerous to humans, and it was always, people kind of scratch their head. At this point, they're going to revoke that, and it would certainly help certain industries, power plants, emission standards, things like that. It would be a massive deregulation. Would it change any of your capital spending plans? Would you be afraid to think it's going to last forever because in 3.5 years, President AOC could bring it back or something? Would you not act on it, or would it actually help your industry or change how you look at the future of what you do?
Yeah, let me answer that in two buckets. The first bucket was, if you look at the business that we're in with respect to sequestering carbon capture and storage, which, by the way, all the investments that we're making in that business, Joe, are generating returns on average of about 15%. They're very competitive in our portfolio. So these are investments that generate returns and compete with capital. They are not a function of this endangerment finding, so they're unrelated. If you then look at what we're doing in our operations where we're trying to reduce methane emission leaks, that's less about, was certainly not driven by the endangerment finding, but more about our responsibility as an operator. I've always believed that if you produce something, you keep it in the pipes. And so if we're developing methane and natural gas in the Permian, we have a responsibility to make sure that we keep that production contained and find sources of leaks and repair them. And we're going to continue to do that.
So it'll still be, you think you'd still get returns if it became less of a priority to, as far as emissions go, you would expect the carbon capture sector of your business to continue to generate returns like that, even if it becomes less of a priority for the entire world?
Well, it's not driven by an endangerment finding. It's driven by, we have 7 customers now who are paying to have us sequester the CO2. It's driven by businesses who are deciding to reduce their emissions. So
they might not be doing that as much, Darren. They might not have the, if the government's not breathing down their back.
They might not, Joe. I'm not going to make a decision for all of them. What our job is And Joe, basically what we're doing is taking our capabilities
No, I
and trying to
understand.
meet the demand of customers. There's a demand for that today. We're generating returns doing it. It is, one of the beauties of the approach that we're taking is it's very consistent with our core capabilities. So unlike some companies that have had to go off and try to start brand new businesses to address this, we're basically leveraging the capabilities and technologies that we currently have in-house to help address the need that people are willing to pay for. And so that's the business that we've generated. How long that lasts, we think longer term, ultimately the world's going to find thoughtful, efficient, effective ways to reduce emissions. And the paradigm I think many people are trapped in is that you've got to give something up to do that. And our view is you can do both. We took lead out of gasoline, we took sulfur out of diesel to address environmental
That's all-
impacts. This is just another
You're
example. of
conflating
that.
all the other useful things with the point that I was trying to make. The whole idea of net zero may fall by the wayside someday. Aaron, we'll see, maybe not.
Well, I think the ability for the world to get to net zero today doesn't exist. There's
No,
not
I know,
the
but
right
the
policy
whole
in place.
rationale, the whole rationale might not exist.
We don't know. We
Yeah,
don't know
well,
what administration's
I-
going to do what.
No, I know, but I'm talking about the actual scientific backed rationale.
Yeah, we don't have a business based on net zero, so I don't
I
know
know.
that's
Well,
particularly
and,
relevant to what
it's
we're
the
trying to
same
do
thing.
here.
It's the same trend we're talking about.
Hey,
But-
Karen, let me just jump in and ask before we run out of time. The EU has made this promise to spend $250 billion a year on American energy every year. First of all, is that possible? Because I think they spent something like $70 billion back in 2024. And secondly, how does that fit in with all that we've talked about in the past in terms of European regulatory issues that you all have run into there?
Yeah, so very quickly on the demand side of the equation. I haven't done the balances, but frankly, trade deals I don't think create new demand in the world. Frankly, what happens is you reshuffle where the supply is coming from, and so I often think about the world supply. It's round, things move around and get repositioned. That's how I generally think about it. Maybe you unlock some additional economic activity and incrementally increase some demand, but this is really about where the supply is coming from, and from our perspective, global prices are set based on that broader supply and logistics equation. So I don't think too hard about those types of commitments, frankly. On the regulation side, I hope that the negotiations that the Trump administration is having with EU is addressing this extraterritorial legislation that they recently passed. Last time I was on the show, I talked to you about this Corporate Sustainability Due Diligence Directive, or CSDDD. But that basically says, if any company sells into, any part of a company sells into Europe, then every part of that company is responsible for meeting the EU climate regulations, whether or not they're in Europe or whether or not they're selling into Europe. So if you think about it, as trade goes up with Europe, more U.S. companies are going to be selling into Europe and being forced to comply with EU climate regulations, even if they're for businesses that aren't even located in Europe or in fact selling in Europe.
Like the
So as the Trump administration, as the Trump administration deregulates U.S. businesses to make business more effective and efficient, it's at the same time piling on EU climate regulations, which is going to make us less globally competitive. It's going to get us tied up in European bureaucratic red tape. And frankly, if they judge that you're not in compliance, there are bone-crushing penalties associated with it. So I'm very, very hopeful. I know we've talked to the administration many times about this, that they do something to address that extraterritorial legislation, which frankly is some of the worst legislation I've seen come out of Europe.
I mean, it's very similar. It's similar to what we just heard from Dr. Scott Gottlieb, just talking about how the pharmaceutical stuff is going to be the same sort of issues, that these pharmaceutical companies were beholden to the prices that were there. Yours is different because you're right, it would be your whole business would be beholden to whatever the EU decides to do. But these are much bigger issues for the USTR and for trade issues to be taken on. But Darren, we appreciate your time with us this morning. Thanks for coming on your morning of your earnings, and it looks like right now the stock is up by about 0.6%. Thanks, Darren.
Thank you, Becky. Nice seeing you. Good talking to you, Joe.
Good talking to you, Darren. I'm with you, my man. I'm with you. I'm trying to help.
Still to come, folks. The July jobs report, our expert panel ready to go. We're going to break down the numbers and market reactions. Squawk Box coming right back after.
suspiciously.
Welcome back to Squawk Box. Rick Santelli here with the big breaking news of the morning. The big July jobs report. Non-farm payrolls up 73,000. Definitely a bit light, but maybe it's the Goldilocks. We'll have to see how the market moves. 73,000, that would be the lightest rate of the year. You have to go back to October of last year to find a lower non-farm pay set, 44,000. Now, the revisions, here's a biggie. The 2-month revision, minus 258,000. That is a biggie, a biggie. Average hourly earnings on month-to-month basis come in as expected, up 0.3. And if we look at year-over-year perspective, up 3.9. That's important. That's 1/10 higher than expected, 0.2 higher than the 3.7 in the rearview mirror. And that 3.7 was the lowest year-over-year earnings rate going back to mid-21. If we look at the hours worked at 34.3, that's up 1/10. That's a good thing. The unemployment rate moves up 1/10. It moves up 1/10 from 4.1 to 4.2. And this makes it the the fourth 4.2 read of the year. To find a higher reading, you're going way back. You're going all the way back to October of 21 when it was 4.5. Now, if we look at labor force participation, comes in 1/10 light, 62.2. That's 1/10 light in the rearview mirror and expectations. 62.2. To find a lower number, you're going back to the end of 22. And finally, the underemployment rate, which is called U6. That 4.2 is called U3. 7.9 on the underemployment rate. That would equal where we were in March. To find a higher one, you're going to February. What's the market doing? The market in interest rates is moving lower. Why is it moving lower? Because of the big revision would be my guess, and maybe partially due to the light non-farm, but it is the revision. We have moved down quite a bit. We're at 432 now. Pre-number, we were hovering around 439-ish. And if you look at where we settled last week in a 10, it was at 439. So we're now down about 7 basis points on the week. A 2-year last week closed at 393. It is now down 10 basis points, and that's after closing at the highest level yesterday in the short end since mid-June, of course, of this year. Pre-opening equities, they're moving a bit lower, but they haven't made new lows in the Dow futures yet, so we want to monitor that. Joe and the gang, back to you.
Yeah, thanks, Rick. I'm not on Truth Social, but I'm waiting. We're going to hear something about too late, are we not? It's imminent. But this gives everybody, something though, Rick. It gives people that hate the tariffs are killing the economy. People that want interest rates to come down, see, I told you so. The labor market's weakening and there's no inflation. This is going to give everybody on both sides of all the issues just a bunch of stuff that they're going to point to as evidence. I'm waiting for Steve State. He's working on it right now. He's typing.
I don't get all the minutia. I get to gloss over what just comes across the wires. But one thing I will throw out there, one of the key factors of this administration has been trying to pare down the size of government. So government hiring is included in this report. So to see non-farm payrolls lower, to see revisions, shouldn't be all that shocking, at least in terms of how much government roles have played in these numbers. Need to point that out. In terms of the unemployment rate, 4.2, that's definitely an uptick, but still, historically speaking, well behaved. Those are my 2 cents.
The trouble is that there were massive revisions, it seems to me, in the private sector, Rick. That's really one of the big issues.
Oh, yeah, and that's what I don't get to see the detail on.
Yeah, I can tell you that right now. I think the private sector, I don't have the number in front of me, was something like 78,000 last month. That was revised down to 3,000.
Whoa.
So we can say at this moment, the job market is substantially weaker than we believed. At 829 and 59
You have to really believe inflation is coming back to not think that maybe Waller and Bowman are right.
It has long been the contention.
I won't say Trump was right. I'll say Waller and Bowman. I'll give you some people that you...
Joe, I don't really care. But here's the thing. It is long believed those who said the Fed will cut when there is substantial and obvious weakness in the job market. I believe even the Fed chair has said that.
Is it here?
I think it's here, and it's here in part because you have to believe that there's a systematic overstatement on the monthly basis of the jobs number. In fact, Waller alluded to that in his dissent comment where he said that if you take in revisions, he almost gave us a heads up on it, but I know what he was talking about. He was talking about already public data. If you look at the revisions, the job market may be weaker than we thought. So,
Can I ask a question?
Yes, please.
Is there reason to think that our inflation numbers are better than the job data?
Becky, what are you, the person with the salt looking for the wound and then you pour the salt in there? I cannot sit here and defend the data the way it is. There are very smart bipartisan groups of people who think the government is doing a terrible job now in terms of reducing the staff. We are imputing or estimating more and more data than we have in the past. So yes, it is likely the inflation data is also going to be subject to similar revisions, as well as I don't know what the response rate is right now in the jobs surveys.
Without any instruments.
Well, put it this way, it's a bit like saying I'm going to use 2/3 of my instruments rather than all of my instruments to try to fly the plane. And it used to be a quarter
I don't
or
wanna be on that
10%.
plane.
What's that?
I don't want to be on that.
Well, you're on that plane, Becky. But real quickly, I'm looking at modest declines in the private sector. I don't see anything big, nothing double digits, like -1, -7. Private service was up 96,000. That's good. But manufacturing, to get to Rick's point, I have it here having been down 3 months in a row. 26 and 11 is 37,000 jobs lost in the manufacturing sector over the last 3 months. So whatever is happening on that tariff front, which was supposed to help manufacturing, has not, as of yet, seemed to have helped. It's just right now we need to be very careful that we do have a job market that is substantially weaker than we thought. And then we'll get to the guests and I'll tell you what's happened to the Fed probabilities. I need to calculate that.
All right, let's get to our panel. E.J. Anthony, Chief Economist at Heritage, Natasha Sarin, Yale professor and president of the Budget Lab, former Treasury official under President Biden, and Sarah Malik, Chief Investment Officer and head of equities and fixed income at Nuveen. We've still got Steve and Rick with us as well. Natasha, I was trying to figure out what your take would be, and I guess probably Orange Man bad, tariffs are awful. Is that where we are, basically?
Yeah. So, Joe, I think you know this well. Going into this week, the Fed had an unfortunate timing because it had to make a choice ahead of getting a whole lot of new data. And now we have the data, and the data tell us that the choice is going to be hard ahead because, as Becky was pointing out, the inflation data, you're starting to see the impact of tariffs pretty substantially. Durable goods inflation, which are the sectors of the economy that are most impacted by the tariffs, saw a 1.7 percentage point increase in inflation over the course of this year. That's the highest uptick they've seen in any 6-month period, absent the pandemic, since the 1980s. And then on the sort of flip side, you got this jobs report that was showing and the June report actually was already starting to show signs of cooling in the labor market, but those signs have continued and gotten stronger as a result of this report. Yeah. And now you're in a challenging moment because the Fed's dual mandate, it's inflation and it's employment, and both pieces aren't looking that good. And indeed, to your point, it's because of the fact that these tariffs are really a drag on the economy, just like my colleagues and I at the Yale Budget Lab have modeled.
It sounds SFE, sir. What is it?
Stagflation. Real quick, we have now a 75% probability of a September rate cut. That's up from 44% for 45%, and a 71% or 72% probability of a December rate cut. That's up from 44%.
Would this qualify for an emergency cut or no?
I don't think so. I think that as long as the market prices it in and is clear where the Fed is going, the Fed will be happy. And you could also, by the way, jawbone a rate cut by the comment. We have Jackson Hole coming up.
Right.
It may not cause an emergency rate cut. EJ, it may cause an emergency Truth Social post.
All caps.
About too late, pals. I think. Don't you think?
Oh, and it's going to be in all caps. Get ready for it. It's going to be quite long. There's a couple things we got to remember as we look at this data. One is the fact that these massive downward revisions are not new to this year. The idea that somehow this is because of staffing shortages doesn't explain why we had the massive downward revisions for the last 4 years. Basically, this is a post-COVID data collection problem when it comes to the jobs numbers. In fact, just earlier this week, we got the quarterly business employment dynamics report from the Bureau of Labor Statistics, and sure enough, that showed that 2024 has another massive overestimation of the number of non-farm payrolls. So next year, when we get the annual benchmark report for that 12-month period from March to March, we're going to see another huge annual downward revision. And that's on top of the existing month-to-month downward revisions that we've already had and that we clearly continue to have. So again, the idea that somehow there's something wrong with the data and it just started this year, that's not really new. Again, this is a post-COVID problem. The BLS probably needs to seriously rethink all of their models, whether it's non-farm payrolls, inflation, you name it. The other good thing that I saw in this report, though, is the fact that a lot of the decreases that we've seen are actually coming from the federal government. Since January, non-farm payrolls at the federal level are down 84,000. So they're clearly making good progress in terms of cutting the bureaucracy.
Right. Okay, Sarah, I promise I'll get to you, Sarah. I promise it. But I'm going to let Rick start talking, and I can't control what Leisman does, but I promise I'm going to get to you. Rick?
Yeah, listen, Anthony hit on something key. And I'm not saying that this data may or may not reflect some of the tariff issues, but we don't really know, because one of the big things that happened, as Anthony pointed out, is the seasonal adjustment process, not only on this data, but on lots of data, is in question. Surveys, whether it's University of Michigan, all of these things are under review in this new time we live in. And in terms of the staffing, all I know is if you look at staffing pre-2020 compared to today, your answers are going to be much more tightly wound than some of the numbers were thrown out there. In other words, just because we've had jumps and now we're retracting on some of the actual headcount here doesn't mean it's responsible for this. So in the end, where we go off the rails is that we try to politicize the interpretation of data. We've had a long timeline of a positive labor market, and the slowing isn't shocking to anybody. So trying to divine exactly what the catalyst is for these numbers and these huge revisions, well, yes, some might be tariffs, but exactly to what extent, we do not really know yet.
All right, let's get some investment advice. What would this cause you to do, Sarah?
Well, Joe, before I get to the markets, I want to talk about the importance of this private payrolls number. Before the revisions for last month, private payrolls came in at 74,000, which was already down about half from the month before. So seeing that downward revision to 3,000, I think, is very worrying for the U.S. economy. Now, this miss and also this downward revision is piling on top of three other factors that the market's dealing with. That's rhetoric around the Fed and what's going on there with the dissent. Also, tech stock earnings, which have been underwhelming, ending with Amazon and Apple last night. And of course, tariffs now coming in at a baseline of 15%, which gets you very close, if not to a recession. So that, I think, is all why the market is going to continue to react poorly here. You mentioned the silver lining, which is what is the Fed going to do? Let's go back to September 2024, when we got that 50 basis point surprise rate cut. That came after 3 months of disappointing double-digit payroll gains. So if that September number comes in poorly again for payrolls, the question is the Fed going to only cut by 25, or could they cut by 50 basis points?
Really?
That's an interesting question.
Is that reflected?
I can reflect that. I can reflect that. I can reflect that with a number, which is I don't see a bid right now on the 50.
On the 50. Natasha,
there's a 36% probability that by October it'll be 50 down.
Do you think you think once again the Fed is too little, too late, Natasha, or not? You're not of that.
I think that the challenge that the Federal Reserve is navigating through is that the labor market has, I agree, it's cooled, and there have been signs that it's been cooling over the course of the last months. But unemployment, even now, when we said this, is at what, 4.2, and that is higher than it was before. But it is actually a strong labor market that gave the Federal Reserve a fair bit of time to kind of wait and see how this tariff uncertainty was going to evolve and reflect into inflation before it made choices on rates. I think the challenge, like I said, is that inflation is also not moving in the direction that you would like it to if you have a cooling labor market and want to be thinking about cutting. And to a thing Sarah said, I think even if we don't get a recession or a major downturn, and that is, incredibly hard to predict, what we know is happening is that as a result of tariffs at these levels, Joe, that are now they're like 8 times what they were when President Trump took office. You're in a situation where you're cutting 0.5 percentage points from GDP each year. That's like $150 billion. That's a very significant loss to our economy and a very significant loss to payrolls, we think on the order of 500,000 employees a year, which is kind of what you're starting to see reflected in the data. So I think a lot of damage has already been done, and frankly, my vote for how to undo it is to revert back from some of these incredibly high tariff rates, but it looks like the president is going in the opposite direction.
I thought you were going to say it was revert back to the Biden presidency.
The way it says this, what do you think the chances are about that happening?
What?
Not that there's a reversal on the tariff piece,
come along and
but that we get into, I don't want to say taco because I don't know what that even means anymore, but that he basically punts on some of this stuff because he sees what's happening.
Joe is sort of onto the issue, which is that the president's going to blame the Fed and not himself for this. Now, I think what this is showing is the narrative we've been telling, which is that there has been a chill over hiring from the concern about policy in general is true. We every week we religiously follow those jobless claims.
Right.
We're not seeing the firing. Bowman actually talked about it this morning in her concern that there's essentially labor hoarding. Companies will hold on to their employees as long as they possibly can, but you have this labor hoarding idea, and people, and now we're seeing that. Now, whether or not some of the passage of the big beautiful bill, along with maybe more clarity on the tariff outlook, might unfreeze some of that, we'll have to wait to see. Private sector this month was okay by itself, but you can't rely on it because of that big downward revision the prior 2 months, which, by the way, we were right, that gentleman was right earlier that we have had a lot of revisions in the past.
EJ, you want to wrap it?
EJ is what I'm talking about.
EJ and Sarah maybe have some final words. EJ, something quick?
Well, there's a couple of things here, Joe, real quick. One is that the tariff rates today, as of this morning, the average tariff rate's only 15.2%. That certainly doesn't sound like something that's going to break the back of the economy when you have income tax rates in the high 30s. So if we're going to be up in arms about, again, a 15% tariff rate, I don't know why we're not screaming about where our income taxes are right now. On the inflation front, there's a couple of things. One is the fact that when you look at not only the headline numbers, but also the core numbers, and then break it down by median, CPI and PCE, and also the trimmed means for both of those indexes, what you find is that the price increases recently are very widespread. In other words, it's not isolated to just those industries or products where you would expect to see an impact from tariffs. That tells us that this is most likely from monetary and fiscal policy. It's a devaluing of the currency as opposed to isolated instances. And sure enough, what we've seen this year is that as energy moves up and down in price, that's had a tremendous impact on the broader market in terms of prices and in terms of those inflation rates. So that seems to be the bigger story here. And then lastly, when it comes to Powell, he has said several times now that what he's really paying attention to is not jolts, is not the payroll numbers, but instead the unemployment rate. And so even if we get a tremendous softening in the labor market by all those other metrics and the unemployment rate stays low, I think we may be overestimating the chance that we get a rate cut this year.
Right.
Okay, just, Rick had something. Rick,
I got one question.
Yeah, real quickly, market movement. We should show an intraday of the dollar index. Dollar index is down almost 1%, and also show a 2-year note. 2-year note hasn't closed at these current levels since very early July. My point here is, when twos and dollar behave like this, this is a statement about the Fed and about easing, and maybe 50 basis point percentages will key off of these two dynamics. So that's what you really want to pay attention to.
Steve, what do you think of this? So poly market right now. 25% decrease. 54% say that there'll be a 25% decrease in September. 41% still say no change.
But
I mean,
I don't know if you believe.
EJ has an interesting point about where the chair may be. I think the chair is ultimately a dove concerned about the idea of a resurgence of inflation. And so I think with the story here is that he is probably keyed more to the unemployment rate, but both he and his committee are going to be concerned about this payroll weakness.
Yep.
Period. End of story.
all right, Sarah, sorry. You want to just say have a great weekend or something? We don't have any time left. You got anything like 2 seconds?
I just want to say history shows if the Fed waits until the employment market's to crack to cut interest rates, it's too late, and that usually leads us into a recession. So how's that for good news going into your weekend?
Wow, you should be
That's some parting words.
Advisor to the president.
Hence the nickname.
Have a nice weekend.
Hence the nickname. Thank you. Our thanks to EJ, Anthony, Natasha, Sarah.
I'm gonna die.
Sarah Malik, and then it doesn't hit. It just says Santelli and Leisman. I guess you guys are like
They're
Prince.
known.
Yeah, you're like
You have to
Madonna.
thank us. It's proper.
Squawk Box, be right back.
No, just one name.
For certain.
Coming up next, Roger Ferguson cleaning up the jobs data and what it means for the Fed. Take a look at the futures. Dow off about 345 points right now. NASDAQ off about 240.
I need insurance.
Welcome back to Squawk. The July jobs report coming in weaker than expected. President Trump just posting on Truth Social, too little, too late. Jerome, too late Powell is a disaster. Drop the rate. The good news is the tariffs are bringing billions of dollars into the USA. Clearly, the president thought that his tariffs were actually going to have this impact and therefore needed the Fed to make these moves. We're going to bring in Roger Ferguson right now, former Fed vice chairman, now a CNBC contributor. What do you make of all of this, Roger? What's your reaction?
All right, Roger. Time to cut. He's never
My
said
reaction. No, hold on, Joe. My reaction is that this creates increased complexity for the Fed, not simplifying the decision. What we didn't focus on is average hourly earnings going up from 3.7 to 3.9. It's a backdrop in which there are a number of analyses that suggest inflationary pressures are more likely to increase than decrease. And the other point to make is the unemployment rate, which is the one that Chair Powell focused on most recently, stayed roughly steady at 4.2. So increased weakness, the revisions are not helpful. But as he will tell you, as he did tell you, there's a lot of data left to come. So I think the market's pricing in a big move towards September, maybe right when we get there. But I think it's a little too early based on one
Roger,
relatively weak report.
Roger, I could see. Look, if you really believed that that Powell was going to move in September, some people would actually look at this oddly as good news, because it would mean that he's going to move in September. Maybe he's going to move again in December. Right? The markets are not saying that right now. I think they're worried that he's not going to move to some degree.
So I think the markets are right, because he was pretty clear with what we call a reaction function. As long as inflation is somewhat above the target, as it is, and the labor market looks fundamentally healthy, then, as he said, restrictive policy may well be right. If the balance of risk changes, they're worried less about inflation but much more about unemployment, then maybe it's time to move. The labor market has shown that it's roughly in balance. I agree this has elements of weakness here, but that 4.2 unemployment rate basically says supply and demand are roughly where we want them. And so I think the market's right to say, this is a bit of a head scratcher, not this is a clear, all the hands on one side, cutting aggressively in September. We may get there, much more data to come. I think it's premature to say this report is so unambiguously weak unto itself that the Fed has to pivot and be prepared to cut at all costs in September.
You never see a big jump in unemployment, do you, Roger? Do you remember in your experience, what's the biggest you said? I mean, you couldn't go 4.2 to 4.7 like in just like a matter of months, could you? Or is that, and we don't have a lot of time left, but is that possible? Something like that could happen?
Well, you said in a matter of months. Obviously, it's possible in a matter of months. It's a sign of an economy that's moving to recession. Does it move that way from report to report? No, it does not. Okay, but I would caution everybody, one report, let's wait and see. Right. That's what Chair Powell said. I think he really believes that. There's a lot more data to come.
We got to thank you. Have a great weekend. Squawk on the Street begins right now.
Good Friday morning. Welcome to Squawk on the Street. I'm David Faber. That man is Jim Cramer. We're live from Post 9 at the New York Stock Exchange. Carl has the morning off. What a morning it is. Oh my God. Talk about a summer Friday. We got so much news here, and of course we have a market that is looking at a lower open when we get started with trading a half hour from now. Let's get to our roadmap this morning. President Trump unveils sweeping new tariffs on a number of global trading partners, including, of course, Canada. Their rate goes up as well. Apple posted the biggest revenue growth in more than 3 years, but there are tariff concerns as well there that temper investor enthusiasm. As for Amazon shares, they're down. Gloomy outlook overshadows what was a strong
I'm onto that
quarter. And if all that's not enough for us to try to cover, how about investors digesting a jobs report that came in well below expectations, with revisions in June significantly lower than the original number. Let's start with the president imposing tariffs on dozens of countries, including Canada. It's now at 35%. It had been at 25%. Of course, that's That's only goods that are not covered under the U.S.-Mexico-Canada trade agreement, Jim. But we came into the session with that perhaps weighing on the futures a bit. You know, we're looking like we're down 1%.
Right.
Then we also get the employment numbers. So let's go through trade. Let's move on to jobs. Then we will get to the big earnings.
Well, look, I think trade continues to shock people that the president takes any action, and then they're not shocked. So they'll look at it over the weekend, and then they'll come and they'll say, you know, it's really not that big a deal. It really doesn't matter. So that's my take on that. I think that this employment number does matter because it confirms that either the president knew or these two dissenters knew. That's what people are going to say, a little conspiratorial. But it's going. I saw Mr. Ferguson talk about how you got to wait and see. I don't think the president is really in that wait and see game. He did seem to almost be calling for a coup in the Fed.
I'm not sure we've gotten a posting yet on his Truth Social network that he uses to communicate. I think Andrew or Joe said something earlier, and I'm sure that will be confirmed in the sense of I'm sure we'll get something.
It's
coming after the Fed chair yet again. But before we get to the heart of the jobs number and what it's doing to rates and what it means, any other thoughts on sort of these tariffs? I mean, again, Mexico gets the 90 days reprieve. Oh, is that just out?
Too late.
Okay, there it is. Sorry, guys, I hadn't seen that. Too little, too late. Jerome, too late, pal. Just drop the rate. All right. And then back to tariffs, which actually gets me back to what I was talking about, which are bringing in, by the way, significant revenues
They are.
every month as we sort of seem to move to at least a 15% overall rate. Canada now, which is, you know, our ally with a border that is a peaceful border, 35%.
Carney insulted the president.
Insulted him.
Yeah, he insulted him.
How did he do that?
Because the big issue here, and Peter Navarro came on our show and said that, is you don't want any taxes on any of our tech and what we do. And Carney snuck that in.
But then they reversed it almost immediately.
The president, he doesn't count the reversal. The reversal was in reaction to the fact that he said, okay, look, this is unacceptable. This cannot stand. So I think Canada, again, we have to be careful because it's the stuff not covered by USMCA, so it's really difficult.
Well, a lot of what it is based on, and I'm looking again through voluminous paper here, of course, Jim, I look almost like you today with my pile, was on fentanyl. It was on the fact that they claim that Canada continues not to do enough to stem the flow of fentanyl across the northern border, even though you know the numbers are far, or have been certainly far lower than anything coming from Mexico.
I don't understand why the president just say, okay, look, they destroyed our aluminum industry. Why does he just say that? That is what happened. That's more important than fentanyl. They've destroyed some of our industries. They have not. By the way, I think they're a great ally, and I think that we do a lot of trade with them. But if you look at what's happened,
well, those are both true statements. Yes, they have been a great ally, and we do a lot of trade with them.
But they've not been great partners. They've wiped out a lot of our industries. I actually want to hear what CEO Mike Worth of Chevron has to say about Canada. Because Canada's not been so great.
Okay.
Canada's taken us on, but I'm saying the president is not as articulate as I'd like about why Canada may not be such a good actor, particularly because we know Mr. Carney as a delightful man, a very smart man. I read I read one of his books. It holds up under close scrutiny. I mean, look, it's not Hemingway, but it's pretty good. I do think that Canada, we look at what they've done with some of our raw industries, and they're not, let's just say they're not as great a friend as we think.
Well, they are now facing 35%. Again, although many things are exempted as a result of under the
by the way, I mean, I'm not talking about Friend. I mean, Friend, they're fantastic. In the real life, in the real life of them being our great ally, they are. I'm just saying some of their industries have not played ball.
Let's get a little more on this jobs report, then let's get to Amazon.
Don't you find that
and
it's a little shocking?
The jobs number?
Yeah.
73,000. Jobs were added in July. That was obviously below what those who follow this had anticipated.
Well,
and then it was the revision in June, I think, and you heard Steve Leisman going on about it, of course, in the last hour.
They're plummeting. They're going the president's way.
It's the revision, Jim, that really is.
Yes.
I mean, 14,000. We were at, what, 147,000?
We were strong, and now we're
so
weak.
we basically have very little job growth, and to your point, rates are dropping.
We have very little job growth, and we have wages not going up. I mean, that is when you cut. Now, look, I've been a big backer of Jay Powell, but this is a number which just says Jay, you didn't need to wait, and he can say, well, look, I'm waiting till, I'm waiting for like 60 days. But every day matters with this president. Every day is a new. Let's destroy the drug industry. We haven't done anything lately.
He's still concerned about inflation from the tariffs. Say again?
Well, I was just saying, if I were the president, I would say, okay, who should we take down?
Who should we what?
Take down. Let's take down.
What
Let's
does that
take down the gold industry.
Take
that could
down?
drive Bitcoin up.
What is
I'm
this?
just
What
saying
are you
that-
talking about? Take
no,
down?
I'm
What are
just
we?
saying that last
What are
night-
we? A
did you-
family? What are we doing here?
Well,
We're
I'm
going to
just-
take them down?
The FBI's not bugging them, believe me. No, I'm just saying that. Did you expect? Do you have many people in your
We're gonna
group
take
of
down.
friends who said
Yeah.
that Canada was going to have the boom lowered on them last night? Did you know that? Did you know that?
Did I know that they were
Yeah.
going to have the? It seemed likely that that was possible.
I'm
Yes.
saying that he would. I think he thinks that the Blue Jays should go to Tulsa.
Does Tulsa need an MLB franchise?
Not Toronto, but Tulsa.
Bowman and Waller both put out statements this morning, sort of discussing their
Amen, chorus
dissents.
to the president.
And I'm looking at Waller here, who's saying, they think that we're maybe at 1.25 to 1.5 percentage points above where we should be in terms of the data implying a policy rate should be neutral,
I don't
3%.
I think you had to do it quarter by quarter.
Yeah. So there's Waller
If I
talking about
took
that.
over this Fed, I would do quarter.
I know. Well, listen, as I have said many times, I think you are in the running, without a doubt, to be the next Fed.
Contracts up. I want to serve my country.
And I don't want to
And I wanna
lose you
get
here on this
better
desk,
furniture.
but if the president decides you're the best person for the job, I'm supportive of you.
Really?
Yeah.
We had dinner last night. You didn't say that.
I didn't, but I'm saying it now so that everybody can hear.
Good. Well, that's terrific.
All right, but before you take on that role, can you just revert back to your usual role?
Not revert back.
No, revert. Thank you.
No problem.
Yeah, by the way, I am such a stickler on language, and to think that I did that.
That's all right.
Thank you. Let's talk about Apple, shall we? It is moving
okay.
higher in the.
Now
Just
you're
let me
talking.
read this.
Now you're talking.
It's higher in the pre-market on better than expected results. The company also posted what was its biggest quarterly revenue growth since December of 21. Yes, it saw a 13% jump in iPhone sales. Jim, stock's up. I know you had a chance to catch up with Tim Cook briefly last night as well.
Victory lap, Chief.
What are your thoughts?
Okay, look. First of all, one of the things that I got a couple of things to say about this.
I bet you.
First of all, people love the phone, and the bears don't get that. I mean, this thing had acceleration in the middle of some cycle. You're not supposed to have that. This was a remarkable quarter. Then people are going to say, well, okay, so they were worried about the tariffs. People bought ahead of it. No, they even had that gain. They're like 1%. That didn't work. Then, David, I have to tell you, what happened in China wasn't supposed to happen. The growth in China was not supposed to happen.
No, I think there was an expectation generally that would continue to not be a strong market, but they had, what was it, over 4% growth, right?
Yes. By the way, when I asked him, I don't know if you caught when I was asking him about India and how the president feels about him, because remember he said, I don't want him building in India. He said, look, I feel very good about my relationship with the president. And he wants more done in the United States, and we want to do more in the United States. And so there's a nice intersection here, and he's building a lot of plants. Nice intersection. So we have a better relationship with the president than we thought. We have better numbers in China. We have good growth for the cycle. When no one thought we'd have good growth in the cycle. And I think the bears have to eat some crow here, or whatever they eat when they're unhappy.
That was, certainly, as you point out, a strong growth, 13% year-over-year growth, especially in the iPhone. And then, by the way,
it's low single digits. They didn't know anything.
Services revenue at $27.4 billion. That also up 13% year-over-year.
And where's the EPIT? The smaller piece EPIT.
I don't understand the words that are coming out of your mouth.
Smaller piece.
Smaller piece. What?
I'm in Roth.
What about him?
I am saying that you can look at these people, these bears, who were saying that none of these things were going to happen, and you can have a good hearty har at their expense.
I see.
And I am.
All right. That said, the hardy har is worth 2.5%. I mean, really,
we have a down day. It's a down day.
That came into the
it's
down double digits this year.
Figma.
We'll get to Figma in a second, and Mr. Figma, who, by the way, his comp plan, the guy who's the CEO, unbelievable.
As it goes up?
Yes.
Oh my God.
Wow.
But we don't talk about that.
To my point, Apple comes in down 17% year to date. It's going to be up 2%. And you're making fun of the people who said don't own it?
Because people are saying, well, then the next quarter is going to be bad. Wasn't this quarter be the next quarter?
It's somewhat a muted response to quite a strong quarter, though, don't you think, or no?
Look, if the market, if this had been yesterday, this would vie with, not with Microsoft, because that's a special case.
But also, even Microsoft yesterday came well off of the gains that it had.
We did have, as Figma went up.
Different than Meta, which maintained much of the gains through the day, although we did turn late in the day.
As Figma went up, very rational people started selling the market because they now see a pattern. CoreWeave meme, Circle meme, Figma meme. And the people who understand this stock market don't want to see 1999, 2000. And that's what we're getting.
That's an interesting theme you're introducing, and I want to come back to it.
No one even knows what Figma is.
But before we drop Apple,
I've
move
used
on.
Figma. I know what Figma is.
It's like two different conversations here.
Well,
I'm talking to you.
I'm in a manic phase. What can I say? Anyone have anything for me?
I want to get back to what you talked to Cook about, because you did mention M&A. M&A.
Yeah.
I'm going to focus you here. And it did seem that his tone was somewhat different. What do you think?
It was. I didn't expect to see it. I asked him about M&A. First, he reminded me that he had done 7 deals. But second,
we got the quote right there, Jim. Yeah.
Look at that. Look what he said.
But then he says we're open to M&A that accelerates roadmap, and we're not closing anything off. And even in terms of size. Was it different than?
That's a gun jump. I think what he's saying is if we saw something that could help Siri, which is going to improve next year, we'd do it. He's not ruling out anything. I mean, the perplexity is always in the discussion.
Always, right? You've been discussing the possibility of buying perplexity for months now.
I switched to Claude. Claude Rains is better.
But that is something that is perceived to be holding the stock back as well as the lack of an AI strategy.
He told me, listen, we're spending a huge amount. We've got a big AI strategy. Siri's going to be terrific. I felt this.
Yeah.
After my discouraging work with every single one of these, they're all below Tim Cook standards. Tim Cook is not going to put one of these things in one of your devices because they're too stupid.
I don't know, Jim. I have right in front of me I have two great summaries that were offered up to me by LLMs of the earnings call from Amazon and the earnings call from Apple.
They can do summaries. They're very good at that. They can't reason. Jensen Wong would tell you, the CEO of NVIDIA would tell you they can't reason. But David, they're so mistake prone you can't use it. Tim Cook would never put his name on that kind of product.
All right,
now I love Reddit, and I do, and Steve Huffman's terrific, and we're going to get to the numbers, but a lot of times they scrape Reddit. That's crowdsource. I don't want crowdsource, okay? I want reality.
Understood.
Did you ever see the sources of who they use?
Yes.
Would you ever use any of those sources?
Some of them I would, some of them I would not.
Right.
Yes.
I mean, to me, it's
Fair
like
point.
and SpongeBob said this, but
Probably
Kevin said
keep
that.
paying royalties to the news organizations who they're scraping.
Yeah.
All right, let's move on to Amazon before we take a quick break here. Shares are down in the pre-market. Quarterly results exceeded most of the analysts who follow the company. Had double-digit revenue growth at AWS. It was 17.5%. Now, we talked a lot about that yesterday in light of the 39% growth that Microsoft's Azure saw, and Alphabet also having stronger and a re-acceleration of growth in the cloud. Would it be enough? Apparently not. But it really is also the guidance, Jim, here that is concerning investors, I guess, this morning as we head into the opening trade. Revenue was up 12% year over year. Operating income was up 31% year over year. 18.2 billion in free cash flow. Advertising, which is just such a high margin business. Now they're number 3 after Meta and Alphabet. Amazon is the largest. They had 15.7 billion in revenues from advertising in the quarter. But Amazon Web Services, which makes up more than half of the overall operating income at the company, revenues up 17.5%. Perhaps not enough.
Okay, so you said that could happen yesterday.
I did.
That's a good call. All right, I want everyone to take whatever they thought about this conference call and throw it away.
Throw it away.
Just throw it away.
Okay.
And a lot of what they thought had to do with the interchange between a fellow by the name of Brian Nowak from Morgan Stanley and Andy Jassy, where Brian Nowak said, I have two questions for you on AWS. They're a little tough, but I'm going to throw that at you. I mean, in other words, this is not going to be the usual, this kind of
usual congratulations on a great
like how your son was
right.
doing 94
At least
miles.
right, but he was so afraid he had to tell them they were going to be tough.
So then Andy gave, and I'm a big fan of Andy, but he gave this rambling answer that made you feel that he was morose, indifferent, sad, and maybe saturnine.
Really?
Yeah, it's not gloomy.
Was he lugubrious?
Yeah, he was lugubrious. This killed the call.
kidding.
This question killed the call. Because when I go over, I parsed Andy's words, and I said, Wow, I guess he's a little more
Well,
down
what
than I
happened?
am.
Why did he respond like that?
Look, he's a very thoughtful guy, and I think if he had a do-over, I think he'd give him a different answer. Because I think this was an incredibly strong number, and I think the Microsoft compare was, frankly, fanciful. Why? Because OpenAI was a part of that number.
All right, you're coming to a separate subject that I want to explore with you, but before we do, the guidance number for the third quarter
The guidance is the guidance.
The guidance is the guidance, and the street doesn't like the guidance.
No, I'm saying that first of all, this number was very good. Second, the advice on what the forecast is was, to me, way low.
So you think they're just lowballing the guidance?
Oh yeah. Third, Amazon Web Service, the backyards. Look, the backyards. They had a power problem. They needed more power. I honest to God, I think Andy would do a do-over on this, and he's an incredibly thoughtful guy. And this answer was the biggest buzzkill that I've seen. It was a buzzkill. Okay. So take it out. Take a look at the backlog. Take a look at the fact that they don't have enough power. Add in these two things. Right now we have Amazon Web, right? We have advertising, okay, and then we have retail.
Morning, retail
I think 2 years from now, we're also gonna have
traders.
Amazon Home, and we're going to have Kuiper. And I think Kuiper is going to rival Tesla.
No,
and
Starlink. Starlink. You think it's going to rival?
Rival Musk. Yeah,
You can't say Tesla,
No,
Jim.
okay, I screwed up. I mean, come on, I'm trying to go as fast as I can.
That's a completely separate company. Kuiper's going to be another
Musk. Yeah, and that's
rival
by the way,
Starlink
they
and what they
use-
can do
they
in
didn't
terms of
use
delivering
Starlink's name in the
broadband.
call, which that was very interesting. But once they make that, once they do Kuiper's going to happen. You're going to look at this company and say, why did I sell it? Because of some number that wasn't right, and because of a jassy moment of despair.
They talk about 400 to 500 million households that don't have broadband that Project Kuiper will help to service.
We'll be doing business.
You know,
I
who
am
knows
saying
when
that
that'll be.
Amazon is as strong as it's ever
And
been.
back to AWS, it is important to point out their run rate is 123 billion in revenue. So
is that bad?
You know, whereas Microsoft Azure is 75 billion, so
Right.
far larger.
Yes, and they're not going to. Azure's not going to catch it. And the number of clients they're getting are good. It was not a bad quarter.
Right.
People who want to call it a bad quarter do not understand that.
They don't
Amazon is not a
understand.
company that has historically given you great forecasts.
All right, so you're standing up for Amazon.
I want to
here.
buy Amazon.
You want to buy it right here,
Oh, I
down
want to buy
whatever it's going to be.
hand over fist. Now it'll go to 216. Then it'll go down 16. Then it'll be down 20. Believe me. I'm just saying. Don't buy into the negative Jassy rap.
We're going to come back
Jassy,
to.
If we had Andy on the phone, I think he'd say, I was cerebral. I was trying to get to the matter of it, but I was off base.
He was a little
He was
too.
off base.
He was a little.
And I'm picking him
he was
off.
a little too
He's
morose.
He's leaning off a second, David. I got a good enough arm to catch it.
You do.
Yeah, I'm picking him
Yeah.
up right here from catching.
Got it.
Right. And I did you you're still here. The trading deadline came and went. You're still with me.
I'm still with you. I ain't getting that. I'm
And the
still
Fed
here.
job?
You're going to the Fed job. I'll just be here forever.
I'm
They
waiting
literally
until the
will
office
bring
is
me
finished.
in.
I hate
They
it
will start
when
to
there's
represent me
asbestos.
through some sort of
I hate it when there's
AI,
asbestos.
and I will just never leave. There I am. It's there again. Still to come, we'll have an exclusive with Chevron CEO Mike Worth. We'll talk everything from earnings to, of course, the All John's future. After closing, of course, that large acquisition of Hess. Let's give you a look at futures. We start trading 10 minutes from now. We just went 20 straight minutes.
Well, good.
Yeah.
People deserve it. The people united will never be defeated.
Where's Quacking the Street Rapid?
Good morning to you. We live in a zoo. Many times you got 8 minutes. So I'm making tea. I'm taking off my shoes. I'm setting up my platforms. The temperature is now 68 outside, which is very hard to believe. Are we going to have winter already? Winters in Missouri last 6 months, at least. This year was a lot longer. So when I retire, I'm going to have a place in Hawaii where the temperature is always the same. Okay. So I realized here in the last couple of weeks, especially when I had that bad trade, that some of my trades are a little bit risky, but 95% of them turn out green. Not all of my trades, but here in this latest period, they have been. Been doing a lot more add-on than I usually like to do, but it's just hard for me to sell because I've seen the repetition of me coming out green on almost all of them.
Happy Friday, everybody. 7 minutes till we get started with trading here at the New York Stock Exchange to end the week. Let's get to our final mad dash as well. We heard from Boeing in terms of earnings earlier in the week.
Might be doing some private trading on some of my riskier ones. Not saying anything, just say I'm in it.
But here's what matters. When we look
So I won't encourage you to take
we're
them.
not going to see Meta as much and Microsoft as much, Amazon, Apple. We're going to look for something that has real staying power.
I got a bunch of pins I got to try out today. I need to,
Such a great price here. You're now getting an amazing quarter for free.
unless you want, I've always asked the room, how do you want me to trade?
Kelly Ortberg's doing
I can trade about any way. I can trade pennies, I can trade big caps, small caps. Pennies, I'm just not as attracted to the pennies as I used to be because they seem like they're just not. A lot of traders that I traded with have moved out of the penny trades because they realize that it's easier to trade bigger stocks. And they're not pump and dumps like low float. So you got to, when you trade a penny, you got to know what you're trading. You got to look at the float. You got to make sure it's got news. What kind of news does it have? Is it positive news or is it, could be positive news, but yet it still will hit the stock negatively. It's very, very seldom any news that comes from a penny is good news. The market takes it as good news. And usually people just jump right out of the trade if they're swinging them or, okay, I got the pop, I'm getting out. And that's the way I used to trade with a lot of them pumpers. They'd call out a trade and I'd go back and look at it. If it wasn't at my support levels, I would set my alerts. And then I'd yell at them, hey, we pulled back here at my support level. Might be worth looking at. I never really did chase penny stocks. I always waited for the pullback and then jump in the trade. So there's, right now I feel like August is going to be a sell-off month or a small correction for a week or so. They've been wanting this market to pull back bad. And if you keep repeating the same thing over and over and over and over again, tariff this, tariff that, recession this, depression that, when there's no inflation, inflation this, inflation that, there's inflation in certain products, clothing and a lot of your liberal companies. We had a huge, I was buying stuff that was up 40-50% from what I used to buy during the Biden administration, and nobody would talk about it, but I seen it. I seen my chicken go up almost 100% Seen my hamburger go up 100%. I seen my supplies for my business go up 50 to 60%, and they ain't gonna come down. So that had high inflation during the Biden years, but nobody was whining and complaining. I was, because, you know, I still think like I'm a poor middle class kind of guy. And I like to buy things at a budget. So my eating habits changed, which I think has contributed to my blood pressure being lower now. I feel healthier than I ever have. And I give Biden credit for that, because, you know, I don't have the courage to go out and buy a brand new car anymore like I used to. I'd go out and buy a new car every time I needed one. I'm not paying $20,000 more for a car that I could have paid for 25 years ago. And then my insurance, you know, just my accounting fees up 30-some%. I can just go on and on and on. And we're about a minute to go here. We're coming down on my support. I got 624.48 or this 623.19 today. In the last 4 days, we've had some pretty good sell-offs. So this kind of goes into my 4-day, 5-day rule. We could have a bounce at the end of the day, or we could have a nice little bounce now and then have that other sell-off we need, and then that include my 5-day rule. See here, routers reporting Swiss President Keller Sutter saying government disappointment by U.S. tariffs imposed the countries despite previous constructive talks. We've been getting we're 30. Okay, here we go. Now I hit my mark right there on my support. What? Meta coin and Meta's hit my support levels. So watch them, see if they reverse. UAL hit my support level. Watch Meta. Meta had them great earnings. What's that?
So why in the hell are contracts so expensive?
That's a good question.
What if VIX is at 19? That's why.
SPY might be more reasonable to trade today if we reverse up. The 628's at 103.
Why the hell is VIX so elevated? Just those tariff talks?
Yeah.
That's stupid.
Plus, I think, like I said, August is the worst month to trade in out of the year.
Yeah.
So we're getting close to my support here. We're going to see on the SPY. I've got to watch Tesla too. Okay, we're about there. Let
I
me
don't
see.
see any freaking orders on the order book, and that's scaring me.
Is it? I'm gonna go look at the 627s. At 112, 113, I got a 113. We just triggered my support on the SPY. Let's see if we get a bounce here. Three black crows. You had a chance. Well, we'll see if it works. This is risky.
Yeah. This is the first morning I can remember where I don't see any orders on the order book. Like they're way down at 62.85, so another 6 points.
Huh.
62.87 now. They're moving them around.
1.12. Oh, strike is 627 at 112. We're at 123. Rob's got puts, I got calls.
There's a lot of orders right here. We'll try one.
Could have sold. I didn't sell them. I should have sold them on that pop. We got the orb there on the SPX. Could be hitting that lower support. $102. Got 102 and 112. Got 107 as a, okay. Definitely Tesla hit my support, but I'm kind of thinking I don't want to get too carried away here 1st of August. Because we, I think, still can come down and hit 623 on the SPY, just in case. There it goes. She's dropping more. Not a red. Coin down $50. Somebody's trying. Google down 3. Hims down $1. And it had a pop. It had a pretty good pullback. Meta down 17. And they were pumping Meta to $1,000. Don't ever fall for that. On a big breakout, you never want to. And we got Master 1176. It's bounced up already. V recovery. I'll be right back. I gotta go ask my landlord something. AVGO down 10. All right, he's back. Market's going to be a mess, I think, this month. Mister's coming to my support. Tesla's got a double bottom here. I'm gonna turn my hand. Okay, we got tweezer bottom on the 2 minute. We got 3 minutes of consolidation on the ES with a doji and a tweezer. So let's go to the, I'm gonna add on, I think, here. .5 minute. I thought I had an hour on here. I don't see it. $6.22. We got to break the 9. I'm gonna go get my tea going and I'll be right back. Think about adding here. Which clock? I don't want to overbrew this. I got 8:50. Yeah, just be careful. I don't think I'll jump into the SPX until we break the 9. Today's kind of a wait and see kind of day. We got 52 cents. So if that don't hold. You got 71 cent average. You got 30 of them. $0.71 times 30. And then we're at a resistance right here. And one more minute, my tea will be done. Can't stand this jasmine tea when it's overbrewed. It's pretty good shit. We've got a tweezer bottom on the 5-minute on IWM. We've got a W on the QQQ. Don't let this one slip away. Damn. If this doesn't hold, I'm stopping out. The 52 cents. If it doesn't hold, I'm going to stop out this support line right here. $621.26. A lot of puts. According to what Sue says there. Knife. So I got out of the puts and I'm gonna get out of the calls here. News coming out at 10 a.m. Here it is, dropping. Consumer sentiment down 1.1 tenth of a point, hundredth of a point. Okay, Mr. 377.60 still on watch. Coin 315, this ain't getting there. We could drop more on coin. We'll definitely hit coming close to support level. 301.70, 14 bucks. What's Sophie doing? There's really nothing down here on my moving averages. UPS hit my support today at 85.43, and I didn't jump on that, and I just now noticed. Here goes a SPY. We're at resistance. We're at a yin yang on the SPY right now. So if you jumped in the calls, and we got the orb and the 21 EMA for the SPX to break. Okay, here we go back down again. We stopped at that 621.26. That was my new support, new resistance now. I'm going to move these up. 623s. I have a feeling I'm going to be doing a lot of fast scalping today. The 623s are now at 133, 120. $143. Go, baby. I'm out. I have a few left just in case. July. I could have got 112, but I didn't get it. Settled for 120. We're going to keep going or what? We're at resistance on the SPY. $621.97. And we could, if we break that, we hit the VWAP. And that's where I have my support line from charting this out this morning on the SPY. We got a tweezer bottom on the 30-minute on the /ES. On the hour, we have a tweezer bottom right now with a hammer. On the 1 hour. And we're breaking the orb on the 1 minute. And we have a consolidated period of 6 minutes on 5 minute. I'm still in some of these calls. Oh shit, I left my tea in there. Dadgummit. I know it's going to taste nasty. Ugh. Ugh. I ruined that. That's twice out of this batch. Ugh. I got it. Oh man, half hour. Way past my time. Ugh. Rob's got Mister. Pretty big sell-off on that one. Tesla bounced up. Back to my... I'm going to go back and watch what I did on the video. Let me get all out here of my calls on SPY. I'm just right under the money. It's really having a hard time here. $1.62. I'm not in nothing now. Ah, darn it. There it goes. $79. And look at the biggest losers today. We only have one green. The SQQQ on my watch list. Oh, there we go. VIX, that don't count. Home Depot, Cost, and Netflix. Today's biggest losers coin by 15%. Amazon 6, Snow 6, TQQQ 5, Mr. 4.7, AMD's down 3.43%, Intel's under 20. In Starbucks pump. Damn. Kramer pumped his stock. Said he liked the earnings, and I said, what? CICC lowers the target price to 95. Daiwa Securities $90, raised it. Damn, 185 for the calls now. We're at the VWAP. Spy at the VWAP. Spy at the VWAP. At my trend line. Are we finished for today? Are we pulling back? Doob, you okay? I mean, Doob. God. Shit. Funk. Where'd Funk go? Good job, my Bardo. I didn't get in the poll. Anybody stuck in a trade right now in the room? Let me know. Is anybody stuck in a trade? We bounced on the IWM on the tweezer bottom that I alerted. SPY still kind of hovering at resistance. If we break it, we'll move up. Right now, you're at a hard resistance. 623.12. Nobody stuck in a trade? Randy? Got a double top on Boeing. Up $4 from the bottom. Maintains a buy, Bank of America to 270. And we got PLTR had that news yesterday. That would have been a good dip buy. Dang it, I didn't think about it. That would have been a good one. Outlook for economic growth. Excellent. Oh, this ought to be good.
Oily, shiny.
SPY's breaking my resistance level. She's going. Still going. Damn. Slash ES is getting to VWAP 6293.37. Tesla reversed $7. Rocket RKT $24 million in volume. Barclay maintains equal weight on Rocket 16. We got Reddit up $29. We're double topping on it. It had good news. And what about Nike? Nike pump didn't turn out too good. Look at that. They came out and pumped Nike at $80 and it's dropped $7.50. I never take their pumps. AMD new high with the double bottom. NVIDIA head and shoulders. Apple, I got 203.28. And Meta held my support at 750.34. Okay, we pulled back here on the calls. We're back to the VWAP. SPY back to the VWAP. Fed, Bostic, job data, significant revisal here is a bigger story. Coca-Cola up 66 cents. Johnson & Johnson up 26. Walmart. Oh, Walmart. That could be one to watch. During the month of August. So far, I don't see any rhyme and reason yet. I just see the VWAP being respected on the SPY. So that could be the start. And we kind of respected resistance, that support that I called. I'm going to wait. If we pull back to 622. Put a alert right there on the bottom of that channel. I'm going to go get my other tea going. I made a bad batch of tea. If I hear ding, I'm going to come running back. Damn, I reached a high level. Here's first support, 622.45. Right there. They're at 150. I'm going to drop, well, I'll drop a notch to 624. Calls. I'm not in nothing yet. I still think we can hit 622. And maybe come down to the right shoulder here for a reversal back up. Boom, baby. Bounced off my support. 624s. They're coming to a double top exit idea unless we break it. I'm out. That's what's good about setting alerts. Coming back down again. You got kind of a double bottom support here, unless she just decides to give up. Right about now. Getting a lot of traction on my phone. I need to go look at. Here comes the 622. And we could see the shoulder line. We got inverse head and shoulders right here. So if I was to grab some, I'd grab some now, but I wouldn't go that big. And it's getting lunchtime too. I'm not in it yet. Inverse head and shoulders. Predicting the next move. Yeah, you don't want to stay in trades too long. Okay, we're coming back down again. We've got a downward mega. I'm still thinking we can hit this here. But we'll see. It's either we break 623.12 or we pull back to 621.26 off the shoulder line. There we go. Drop it. We're back at 622. Okay, what spot here? I got my order ready. Just got to push the trigger. If we did down there, it might move it up to 23. They're both even in volume. Each one of them have 110K on them. $110K, $110K, $106K in calls. $10 contracts when I'm ready. We're about to the shoulder line right here. Now this is also the time of day. It's lunchtime for me and the fat cats. I'll be right back and we will get my tea. Should have an alert set. Oh hell, what am I doing? You didn't trigger my support. It come close. $75 to 90. But I didn't take it. I wanted to trigger my alert and it didn't. I'm gonna check my phone. Okay, we got kind of like a symmetrical flag right now. We're at resistance. So that would have been a 25-cent trade right there. 75 to a buck. And it just within inches, I mean within a centimeter of hitting my shoulder line to take that trade. So I waited. I waited how many minutes? What am I doing here? Yeah. Had a brain fart. Had a Biden moment. Chicken soup. Oh, my tea. We're going to redo this tea too. I'll get back in it. So my first initial trade was a call. That didn't work out too good. I got into puts once I started noticing it pulling back. Now we're breaking out of the flag. Back to the VWAP. Took this trade here, run it up, got back in the calls, and I didn't buy a put, bring it back down, and I called this little head and shoulders right here, and I was just within a centimeter of hitting my support. 7 cents. Well, 11 cents. 10 cents maybe. So right now I'm just I'm going to have my lunch. Anybody stuck in the trade right now? Oh, we're- Okay, we're in the squeeze pattern here. It's either one way or another. Well, we broke out, like Jimmy said, we squeezed out. Not much. I'm a little gun shy today for some reason. Neuralink to enable sight for the completely blind. Can you imagine that? SPY's back to 80 cents here. We're back at that squeeze spot. Do I want to take it here? No. I'd like to see it retest this here shoulder line. So we got, I mean, I called it here, but it's definitely right here. In fact, I'll raise it up. Somewhere in there. That last one could have been 35 center. We got a head and shoulders on the /ES squeeze right now. Right there. So, what's the SPX look like? Same look as the SPY. We got an inverse head and shoulders. Right off the orb. 62, 36.50. Oh, God, that's... Okay, we're back to the shoulder line. We're at 72 cents. These are the 624s. Right about now, 70 cents. We'll see if I'm right. If not, I'll stop right back out. Okay, can't go much lower. We're almost to the shoulder line. Right to the same wick. Made me some bacon. The last of my bacon. That's going to be my dessert. Oh, damn it, I left that tea in there again. I can't believe this. I can drink that. Sure can. Come on, baby, hold. Squeeze. Still in them. This one's a little closer. Ah. Come on. So tight. We've got a double bottom, head and shoulders. Okay. $0.60. I tried to get 58. There it is. Bam, right when I get in it. Come on, give me 65. I got 70 and 60, which gives me 65 cents. And we're squeezing here. I don't know which way. It's kind of a fallen wedge, but it can be a descending triangle at the same time. And it is an inverse, it is a head and shoulders that we broke out of. There's 66. Damn it. Come on. I don't think it's want to do much. Trump privately committed to reschedule marijuana multiple times since taking office. A marijuana moment. President Trump's Transportation Secretary Duffy cancels $26 million in funds for doomed D.C. Baltimore something. I mean, them Biden, they went on one hell of a spending spree. It's like the last time they're ever going to be in office. Kind of spending spree. Read what this marijuana thing says. Back to 63. Let's do something. Anybody take these? I mean, it's a risky trade, but I've been in this thing for what? 5, 10, 15, 18, 19 minutes, 20 minutes. It's not doing much. It's back to 67 cents now. 68. I'm up $60. 70. I'm up 100. $0.76, yay! 78. I'm up and away. There's 82. 84. Now. We're at the VWAP. Oh, Washboard Jim had a pound. Meow, meow. He's getting ready to get out of this trade. We're at 91, 93, 94. Give me a little bit more. Oh, Washboard Jim is getting out. Taking a little profit. Washboard Jim is out of the trade. Out at 96. Oh no. 102. I am done, completely out. Meow, meow. I sat on this trade too long, and my fingers started to sweat. Now at 110. Boo, 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 boo. Anybody take that trade? Michelle number 2 is gone today. You're still my number 1, Michelle. Randy. Ah, 118. God, can you imagine what that would have been? $1,000. Bum 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 bum. $120 shit. A plus. Magnificent. We're coming in on a double top. We're coming in on a double top. $131. Oh my crap. I love making bacon in the morning.
could be holding you tonight. Could be doing wrong, start
doing right.
You don't care about what I
Think.
think I'll just
Sit here and drink.
Hey, putting you down won't square the deal. At least you know the way I feel. Hey, take all the money
To the bank. Don't just sit here and drink.
Hey, listen close and you can hear that loud jukebox playing in my ear. Ain't no woman gonna change the way I think. I think I'll just stay
Sit here and drink.
Yes, sir. Hey, hurting me now don't mean a thing. Since love ain't here, don't feel pain. My mind ain't nothing but a total blank. I think
I'll just sit here and drink. Sit here and drink. 125. Back to 140, yeah. We're setting up to a sending triangle. That's about to squeeze. Oh. Them damn bears, they just get in my way. They don't have much to say. I'm just gonna sit here and drink. Woo! One to 10, did you like it? Well, we're at a double top right now, folks. I'm just gonna sit here and drink. It's an ascending triangle setup right there. Almost a rising wedge, but not there yet. Fuck. So let me tell you a story last night before I get back into trading. So I frequently call the IRS every great once in a while to make sure that my checks are going through. And I had this one that hadn't showed up for, you know, it's got to be in by the end of the month or I get penalized for my quarterly taxes. So I wrote this check out on the 19th and I wrote my other ones out a few days in advance before. Well, I wrote 4 of them out, and 3 of them went through, but 1. I'm going, what the heck? I got to have this in by the 28th. So I called him up last night. I sit back there taking a nap on my telephone for 2 hours. Someone finally picks up the phone. And wouldn't you know, I'd get the rudest bitch out there. So I'm telling her, you know, I want to make sure that I don't default and I get penalized for not getting my taxes in on time. Well, it's not showing up. It's not here. And I said, what? I mailed this on the 19th. I said, I want you to make a note down there that I mailed this in on the 19th. So I'm looking here at my bank account, and the fucker finally went through today. So I spent 2 hours on the phone last night to these idiots. We're up to the 200 SMA. And it finally just went through. At least I think it did. Oh, that could be my... Well, I better check. It ain't gonna show up. I can't tell what number it is. I wrote 2 of them for 200, so I don't know. That might not be the one. I'll know tomorrow. Dang, 165.
Thank you for calling the Commerce Bank switchboard. If you know your party's extension, please press 8 and then the 5-digit extension. To speak to our switchboard operator at any time, press 0. Para español, oprima.
Thank you for calling Commerce Bank.
Customer service?
Protection of your call may be monitored or recorded for quality assurance, security purposes, and identity verification. From setting short-term goals to planning for your future. If it matters to you, it matters.
The,
The answers that matter. Commerce Bank, member FDIC. Zelle is a fast, convenient, and easy way to send and receive money with friends and family who have a U.S.-based checking or savings account, typically in minutes when both users are already enrolled. With just an email address or U.S. mobile number, you can send money to people you know and trust, regardless of where they bank. U.S. checking or savings account required to use Zelle.
All of our customer service specialists are assisting clients at this time. Please accept our apologies for the delay. Your call will be answered in the order received by the first available service specialist. To enable us to service you better, we ask that you please have your account number ready. Your call may be monitored or recorded for quality assurance.
yeah. Well, hurry up.
Thank you for calling Commerce Bank. You are important to us. We will be with you momentarily. Our identity theft services are designed to help you fight fraud by staying alert. Learn more about Commerce ID Monitor at commercebank.com/fightfraud. That's commercebank.com/fightfraud.
Let's fight some fraud, baby.
Now available with Voice ID, it's easier than ever to call us. Once you enroll, your voice print streamlines authentication for the next time you call in. Ask your associate how to enroll.
All of our customer service specialists are assisting clients at this time. Please accept our apologies for the delay. Your call will be answered in the order received by the first available service specialist. To enable us to service you better, we ask that you please have your account number ready. Your call may be monitored or recorded for quality assurance.
Anybody trade that with me?
What can you do to be set for retirement? Is it better to pay down debt or reinvest? Are you getting the most out of your money? If you have questions like these or any others, let us know. We're here to help you find the answers that matter.
Here we go. Yeah, my name is James Howard. I have a business account. And I want to see if this one check went through. It says $200 balance. Yeah, you couldn't tell if it was a debit card payment. You know, could you tell the difference between a debit card payment or a check on your side? It is a check. Okay, well, that's probably it then. I think you answered my question. I will. Yeah, I check it every day when it comes to the IRS. Okay, well, thank you, ma'am. Yes, bye. I'm pretty sure it was the check. I was pretty sure it was the check. That's funny, because that happened to me once before. I called him up and I said, man, this thing ain't gone through yet. And she was a lot more polite. I don't like being late to the IRS. Especially since Biden fucked them all up. And they got egos now. A lot bigger egos than they had before Biden. They're harder to work with. Ain't that right, Chris? Well, I've had a good day so far. I'm going to write a song about the IRS. Now, Sparks, You're going to get a spanking. Don't be making fun of my man. You'll be doing it. You're getting in trouble. Please don't make fun of the man. So I called the chick up and I said, well, it's not going to post on our account until it posts on your checking account. I said, what? Don't you have any... Can't you tell if it's gone through or anything? Or... No, sir, I can't. So you're pissing me off. I didn't tell her that. I did tell one IRS agent she was a nut. She was a bitch, not a nut. Nike loses head of North America women's business to Athleeta. Athleeta. Athleta. I should write a book about it. What's it like to run a business under different administrations? We're coming up to a double top at the 200 EMA on SPX, please. Are we going to get up here to opening price today? Give me a hell yeah. Can anybody give me a hell yeah? That's where the orb is. Can we break the 200 and get to the orbs? My question. Funky? Aringa, you give me a 12 out of 10 score on YouTube? I got ants in my pants. I'm very unprofessional. Turn to think. If I got 5 contracts in my hand, let's break the stand. Can we break the 200? The bank. Mandy Moore. Now, is that girl that... Oh. Well, if we break the 200, I'm going to run this thing up to 60.27. Now, we got a golden cross setting up here. Hello, my name's John. Can you tell me what a golden cross is? Yeah, I'll tell you what a golden cross is, and I'll tell you what a death cross is. The golden cross is when the 50 crosses upward over the 200 SMA. And they're both SMAs. The death cross is when the 200 crosses down over the 50 SMA. Can you tell me what it means when the 9 crosses the 21? Yes. When the 9 crosses the 21, and those are EMAs, you could have a bullish run to the upside. Now that you explained me what the 200 SMA is, what's that called? That's called a simple moving average. I use it sometimes as support levels and resistance levels. Jim, when's the last time you bought toilet paper? 2006, 2004. Ever since then, the companies that I work for supply me my toilet paper. They pay for it. I buy it. They pay for it. So when they're in the dispenser, I take what's little left and I bring it home. And I've probably got about 50 of them rolls in my bathroom. So I haven't bought toilet paper since 2004 for myself. Jim, when's the last time you bought a condom? Oh man, I can't remember. It's been a long time. I haven't been able to use one. He washes his toilet paper. I asked when I first started my business, I said, ma'am, I need toilet paper that's biodegradable. And she looked at me, she said, duh. They're all biodegradable. I said, well, that's what the IRS wanted me to called for. Like a dummy. I felt like a stupid question. We're at the 200 SMA. We are at the 200 EMA. I said SMA, double top. So let's see if we're going to hold this up. We have a ascending triangle here. We nailed the bottom. This head and shoulders right here. You remember me calling it out? So we're going to pull back to the shoulder line. We retested it. Boom! That's a head and shoulders, inverse head and shoulders, 10-4. You know, I ask all my liberal friends, I said, you want to raise our taxes? You ever thought about paying a little extra at the end of the year to the IRS? No, that's for the rich. I said, well, you want to know something? Every time you all increase my taxes, I got to pay more. And I'm not rich. Well, I'm not rich business-wise. Okay, we're pulling back here. Very good job. Do-do-do-do-do. Okay, we're at the 50 right now. 3 black crows with an inverted hammer, with a hammer, not inverted. do I want to take it off the 50? Now, back in the day, this is how I traded with just these two moving averages, the 50 SMA and the 200. Now that I got my new ones, it's just 63 and the 200 down here. So what time? 12:31. I wish I'd have waited one more day to call that bitch. The IRS. That one. We're at 127, so we're at the 63 now. I'd say if it holds the 63, we're bullish, and our last support will be the 200. We broke below a support right here, so the next we have a confirmation right there. So let's take a little dive. $129. Do. SPX? Oh, that's a SPY. Or is it? Oh, I took the SPY. Oh, oops. SPY at 129 to 144. Profit. 3 black crows with a tweezer bottom. If you don't know what you do, just take and grab a chew. We've got to SPY. Let's just sit here and watch it die. So I got in the 624s at $1.29. This is the month of August. So I'm in a good mood now that I know that damn check went through. I told her she was stressing me out. It's the 624s at $1.29. Let's look at a scalp. Come on, baby, let's climb the Alps. We are going for a triple top at the 200 SMA. We got a megaphone. Megaphone. Megaphone / 3 black whores. No, is it whores with a W, ain't it? WHORS? I think that's how you spell it. We can take it to 150. Thank you very much. I feel a little spiffy. There's no gap between the mega and the phone. I just sit here all alone. Man, you're the coolest dude ever, Jim. Knock knock, who's there, Yoko? Do 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 do. I'm in the bank. It's a tweezer bottom. I just love trading. Now that I've got real good at it, I really love it. It was hard, stressful, breathing hard, panic attacks. We're at 118. SPY needs to stay above the 9 EMA, go higher, blah, blah, blah. Yep, correct. Correctamundo. Tesla's at the 200 EMA. We're here at 104, folks, back on the SPY. The crowd's going wild. Do you see what I see? I see the 200 SMA. Bug? Can we hold 623.12? I'm gonna get back in the trade. You ain't got it made. I'm gonna rip out and trade. I'm gonna get in this trade. Tell the girls I got it made. It's this tweezer bottom. Baby, did I ever tell you that you have a tweezer bottom? What do you mean, tweezer bottom? That's the rudest thing. Well, they're have equilibrium. They both are in the same spot. You know, one's not bigger than the other. There's nothing bad about that. I'd rather have an even bottom than a lumpy one with a lot of cellulite. Okay, get ready. SPY 624s at 88 cents. This is risky. If it don't work, I'm out. I mean, it's not much longer here. Can we run this up to the side? I just might take a nosedive. Come on, twit. Drink. $106. We're retesting the 200 here. Oh, excuse me. George!
The rest of the technology stack. And I think that there's a lot of sensitivity in Micron's products because of the commoditized nature of them, which includes price sensitivity, manufacturing sensitivity, tariff sensitivity. So maybe now, Micron is pulling back before some of the other, semiconductor manufacturers and designers, like, for instance, AMD, which is still trending higher, but is pulling back now. And even NVIDIA, which again is pulling back after hitting some new highs.
So what are you saying?
George, I think a big part of Micron's problems right now can be summed up in one word, and that is Samsung. They're about to re-enter this market and get certification, and that brings a bunch of competition right to
their office in-office paperwork.
George, comments on that. Do you think competition has anything to do with their recent sell-off and Samsung re-entering this market?
I think so. I think if you consider the pullback we've seen, I haven't looked at exactly the tariff, constitution agreements, and even in the chip space between USA and Korea. But nonetheless, SK Hynix and Samsung are the other two major global competitors against Micron. So if they have the ability to continue to increase global supply contingent upon some tariffs that have maybe better for both countries in the long run, it may not necessarily be better for Micron as a U.S. supplier. I think the elements behind production and manufacturing of semiconductors in places like Taiwan will present challenges for Micron. That is also maybe why we're seeing a little bit of pullback also lately, because we're seeing some similar price action in a more narrow time frame, like AMD, for instance. But, the cyclicality of Micron's business, I think, is really a challenge. I also think that the handset markets and even the PC markets are still relatively tepid and slow. I'm going to use maybe Apple as a proxy for that. We know that Samsung is a big provider of DRAM technologies to their own flagship phones, their Galaxy lineup. And at the same time, I think the handset markets globally and the PC markets and the server markets are still relatively tepid, and maybe that's why Micron is softening up a little bit. But nonetheless, if you look at the metrics, this is where the challenge lies, because based on estimates right now, the company's not going to be reporting earnings till I believe later this month or early next month. They're expected to earn around $7.82 per share this year. Next year, $12.25. So it's trading at 9 times next year's earnings. On a trailing basis, around 16 times, and again on a trailing basis on a 5-year average, around 16 times. So it is right now looking perhaps fair valued on a relative basis to its own historical 5-year average. You're not getting much of a discount right now in Micron. Maybe if they start to accelerate their earnings per share guidance after next quarter's earnings release going forward, that'll change the outcome. But I do think that perhaps the pullback is warranted, to be honest with you, in the last month, just because of the aggressive move and the valuation, which is balanced right now, let's call it, in this name.
Yeah, George, real quick, I got 30 seconds for you. Just a quick question. Because they grew revenue growth on their high bandwidth memory chips using the AI accelerators about 50%. Is that the key? When you've got AVGO and NVIDIA at all-time highs and Micron lagging, but they need to be in these accelerators, right?
Correct. And their high bandwidth memory is a complementary technology to AI infrastructure, data center, cloud. But the challenge, I think, for Micron is still the revenue constituents of their business is traditional DRAM technologies and chips, which are in mobile handsets, iPads and things, tablets, and traditional PC and servers. So even though they're accelerating, you're right. If you do look at year-over-year comps when it comes to top-line sales in the last 4 quarters compared to the previous 4, there's obviously a big push in the high bandwidth memory markets helping the top-line sales growth for the underlying business. And even going forward, this is where the challenge lies, because if you look at the estimates for the next 4 quarters, 45% top-line sales growth relative to mid-teens historical average, EBITDA growth of 131% compared to 30%. So the numbers going forward are quite high expectation-wise. I just think that the next quarter's guidance will probably be telling in whether the stock recovers or maybe just consolidates further from here.
All right, great breakdown for us. Appreciate it. That's George Tillis, Senior Markets Contributor here. Looking at Micron. Kevin, one of the things that stuck out to me, it's down, 3.5% today. It's pulled back, as George mentioned, from about $130. We're at 105. That's 20%, to the downside. So I looked at a strategy and I looked at the 200-day moving average, which is sitting around $99 a share. That seems to be the next maybe potential support area because it's broken through over the last 2 days below its 50-day moving average. So I looked at a strategy, Kevin, that takes advantage of this downturn. If you think it's going to turn around, maybe gives you a chance to buy it at a cheaper price or just collect some option premium. So going out to the August 22nd weekly cycle, 21 days to expiration. 3 weeks, sell the 100 strike cash secured put here, collecting roughly about a $250 credit on it. That's what you can make, $250 per spread. And it takes your break even where you start to lose money down below $97.50 on this one, Kev. So this is one of those strategies we talk about when you see pullbacks in stock where you can take advantage of higher implied volatility levels. We've seen that from the VIX where, hey, if it does continue to move below $100, Kevin, and gets near that 200-day moving average, you have the opportunity to potentially buy it if you're still short that put, and you get assigned on it at $97.50. So at a pretty good discount to where it's trading right now.
Yeah, a 3-week cash secured put, which takes you right to the 200-day moving average, Tom. Now, the risk is not insignificant, right? You've got about $10,000. But $9,800 in risk, Tom. So, but if you think 200 will hold, you get paid to wait for it to get down there. Do you have? I mean, it takes a little more capital, but make no mistake, this is one where technically you've chosen a spot where you might buy the stock anyway and sold that cash secured put.
Yeah, and this takes advantage of that, like we said, that pullback, that 97.50 break even is where you'd have to purchase the shares because you're collecting that 250 credit. If it stays above the 100 strike, the idea is to let that go out worthless.
We're getting ready to come to the orb.
$250 per put that you sell on that $9,750 in risk, though. That's only if the stock goes to zero, so keep that in mind. All right, great look at the cash secured put there in Micron. That's going to wrap it up for us today here on Fast Market. Stick around, though. Next Gen Investing is coming up.
Watch your orb here. Watch the orb here. You hear me? We hear you, Jim. Oh, did you just fart? More disgusting sitting in your own fart. Oh my God. Did y'all read that? I have to say, Jenny looks good again today. She's got the housewife look.
Look, on the calendar you got Palantir, Uber, AppLovin. Are any of those names going to save the market if something needs to save it? I'm not sure they will. Now, that's not to say that we have to go lower on Monday, Tuesday, Wednesday next week because we're lower on Friday. But, you know, a lot of technical damage was done in a very short amount of time if you're a chartist. And the fundamental picture on the macro front, when you look at the jobs data and the revisions, you don't feel as good about it as you did last week at this time.
You don't, and it's like we almost all forgot the fact that we had, of course, the Fed leaving rates unchanged this week. So that felt like, I mean, what was a volatile day on Wednesday has been somewhat forgotten as well, I guess, depending on how you feel about the Fed, of course, leaving rates unchanged and some of their guidance for the remainder of this year. But we'll focus on the earnings, of course, that we already know, that we already got out yesterday after the close. That's where we'll kick things off on our show. We'll also be looking at one of those names that perhaps could save the market. I think that it's a bit of a reach, but Palantir does report Monday after the closing bell. We'll also review some of today's Fed speak as we've seen this somewhat dissonance between various members, which is a job I will say I do not envy. We'll also discuss those jobs numbers that Alex mentioned, as the U.S. did add just 73,000 jobs and unemployment rose. So we'll parse through that. We'll close things out with rocket companies. Our still bright spot here, up over 13% on some strong quarterly numbers.
Yeah, a lot to get through. Let's get through some of these earnings. They don't seem to matter as much now as they did, on Wednesday afternoon. That said, it's still important to go through each and every one of these. Apple, we can start there. The numbers initially were seen as pretty positive. Obviously, the iPhone numbers were really, really nice. First time that China saw growth, I think, since the comparable quarter in 2023, so 2 full years. There was a lot of positive in this report, but again, the market takes over when it takes over.
Yeah, and this is a really interesting move because Apple was firmly positive yesterday after the close, firmly positive this morning, and now seeing some weakness. But yeah, I think don't let this depict how strong of a quarter this really was. As I think this was broadly perceived as a pretty much needed win. Better than expected iPhone sales, as you mentioned, up 13% year over year. Third quarter revenue that we haven't seen that revenue growth in dollar terms since 2021. And actually, this was its historically slowest quarter of the year, which is of note as well. Their main moneymaker still is the iPhone, of course. That was a huge beat, bringing in around $44.5 billion. In China, we've seen revenue rise about 4%. That exceeded forecasts. And services revenue also reached a new high of $27.4 billion. Now, Tim Cook did say the financial hit from tariffs was $800 million. That was $100 million less than had previously been expected. And those costs, though, are expected to balloon to over $1 billion by the September quarter. They did also note this unusual buying pattern among U.S. consumers in April as tariff made headlines, showing that consumers were willing to buy iPhones maybe ahead of potential price increases. But still, CapEx expected to grow, but not exponentially. They did say they're growing their AI investments. They're open to M&A, and they've quietly snagged up about 7 companies over the last year or so. But again, I think the lack of detail on that is what a criticism. I mean, just based on the vast expansion that we got from the rest of the similar Mag 7 names.
Yeah, I mean, they're quietly building their cash and cash equivalents, significantly. Again, they grew almost 42% up to, just over $36 billion. So to me, what it sounds like is they're raising funds. They're prepared to make a...
Alex? Stocks sell off, gold rallies on tariff turmoil. Weak jobs data. What's moving the markets? Earnings season is going real well. Don't overthink it. Positive and a negative headline. Big takeaway from big tech earnings. Barron's. Apple stock reports surprisingly strong quarter. Why did it drop then? Damn, man, this thing's at my support. I want to buy into it. I really do, but it's Friday. And I'm getting nothing but bad headlines. Oh, man. The apple looks yummy here. Could I have a Golden Delicious, please? That's my favorite apple. God. Like. Buys out, well, so orders now. Yeah. I'm gonna go get me some more. Well, I don't want to drink no more tea. I know what I can have. I'll be right back.
Constantly misses the mark as far as like weather and things that she tells me, but hey, I will definitely subscribe to the future of that technology. They did also say they're still building pretty substantially in AI, although pretty broad strokes. Safe to say that Andy Jassy was not as enthusiastic about some of the commentary of like if they're falling behind in AI. So that was a bit of a concern to me. I will say the overall tone of the call was, and you know, the report was still positive, but there was just some times he answered where I was like, that is where I would have been overly enthusiastic.
Yeah, maybe he's still just getting kind of used to, you know, running the show a little bit. I'm not going to criticize that too much, but a lot of the same things when it comes to valuation apply here. 26 times forward earnings, the 5-year average closer to 23.5. Pre-2023, 25 would have been the high end of the range for a forward earnings valuation. So still would be quite elevated at these levels. But I think to me, the biggest takeaway by far was not just the disappointing growth in AWS, and that was of course in direct comparison to Microsoft. Actually, interestingly, yesterday's reaction was lower Amazon, and then Microsoft actually saw a rally post Amazon's earnings. I think it made Microsoft even look better. But the margins plunged as well, lowest in like a year and a half for the AWS segment. And that's concerning because it's like, okay, normally you'd be taking a little bit of a margin hit to spur growth, but you didn't really see growth outperform, yet you took the margin hit. So, cloud side of the business, it's okay. Nothing, super exciting, especially relative to Microsoft, but I thought the e-commerce side was largely pretty good.
Yeah, I would say definitely largely pretty, still a massive company. And they also did, again, really, I would say the tone wasn't great. There were still definitely numbers matter more, and so you could change the narrative all you want as far as like leadership goes, but there was still really strong numbers from this company, and again, there's still a massive massive player in e-commerce, AWS, and expanding on their AI offerings. So all these companies, I think, have shown the appetite for spend has definitely not dissipated at all, frankly. Shifting gears, though, now looking at Reddit, which saw blowout results for their second quarter. Daily active users topped expectations for the second straight quarter, growing 21% year over year to around 110 million versus the 109 million estimated. International daily active users, though, rose 32%. U.S. daily active users were up 11%. And the company did report net income that improved 45 cents a share from a loss of 6 cents a share just a year ago. And revenue climbed a whopping 78%. So yeah, stellar report, as you can see, from a 21% jump today.
Yeah, the big story to me was average revenue per user, way better than expected, $4.50. Expectation was closer to $3.90, so huge win there. And if your users just hit the mark, but you make almost 10-15% more than you thought you were going to per user, pretty easy story to digest when we think about it. I think this is about the most straightforward result as you could have figured.
Yeah, I would say as well. And our last name today is also pretty straightforward. Coinbase could not have had pretty much a worse earnings report if they tried. I mean, I've never seen a company that missed the mark so badly. I mean, there is some good
This is a good point because I also
Double
think
bottom on the SPY.
the concerns that people thought, and economists and investors and analysts started to feel around Coinbase, which is there's a lot of places you can go to now to get exposure to digital assets. And when you were essentially the only game in town, not only were you seen as a proxy for the space in the equity market, but you didn't have a lot of competitors to fight with people who wanted direct access to them. Now you got exchange traded funds, you got companies like Strategy, you've got tons of traditional financial services companies that are offering this. You have places like PayPal and Block that are offering things like this. Like Coinbase, yeah, they're maturing and their numbers are okay-ish, but they're not the only game in town. It's showing really, really, quickly, how disappointing that can be when you underperform.
And I think that with all of the positive news we've gotten from legislation, the Trump administration has been definitely a friend to crypto. This report is a little confusing. Yeah, transaction revenue was down from a year ago. You had adjusted earnings at 12 cents a share. I mean, incomparable to $1.10 last year. Retail transaction revenue declined. Institutional transaction revenue fell short of estimates. Subscription and services revenue did actually rise, but didn't meet expectations. Stablecoin revenue also missed expectations, and total trading volumes might be the only bright spot. That was up 5% from last year, but down from last quarter. So
well, it all missed expectations.
Everything missed expectations. I'm surprised we're not down more. I mean, we see names get punished for far less.
I mean, they're down 16%. That's a big move.
That's true. I guess I'm getting greedy. I'm used to the days of Snap.
Bloody carnage.
I know. I'm used to the time when Netflix plummeted 40% on the session. That is the volatility I like to see.
You can count those days on one hand.
That's
There's been a couple Facebook days like that. Certainly Netflix and Snap's not in that caliber in terms of company, but Coinbase might be though.
I know, and I guess just again, given all of the favorability we've seen in crypto, it goes to show that competition is clearly eating away at that dominance they once had, as they were somewhat the only player in town that offered, the extent of crypto trading that they did. So really bad miss across the board. I'd say 16% move to the downside. Almost feels like a relief. We'll leave it there, though, for the top of our show. Now, coming up next, we'll look at the latest technical levels in Netflix and Tesla, as well as look at some example trades in both those names.
Don't get choked up. Do. Don't get choked up. Spy. All right, I'll be right back. Oh.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to look at the technicals in two names that we discuss pretty often, those being Netflix as well as Tesla. Two actually non-earnings movers this week, because you already got those numbers, of course, previously. But joining us now is our chart master today, Kevin Corner. Kevin, we'll start things off with Netflix. Thank you so much for joining us today. Netflix was higher, now erasing some of that strength with the overall market. I mean, it's really sell-off we're starting to see pick up here. So what are you seeing as far as the technical front of Netflix?
Yeah, been a good year, obviously. Year to date, the stock's still up 28%. You can see it on the daily chart. We'll see in a second here. A beautiful uptrend, up lower left to upper right, precisely what you're looking for. But we're sitting on a zone of short-term support as we speak, right around $1,160 a share after pulling back a bit here in the last month plus. We can also note, as I've called out with the oval here, the 20-day moving average in orange, downward sloping through the 50-day in purple, giving us a bit of an indication of a potential shorter to intermediate term trend shift here. And I think traders need to be aware of it. You'll notice that, as you said, the sell-off is kind of intensifying broadly in the market, and Netflix is seeming to participate as well. So we're going to see that 1160 need to hold here real quick. If not, we could certainly get a little bit of a momentum-based sell-off opportunity here in the near term.
Yeah, and so as far as now, if we zoom in here and look at, I mean, the recent trends in Netflix, which is still, again, been pretty strong, but closing out July on a bit more of a weaker note, and some of this week's activity also a bit weaker after, what was it, I mean, a ban or a few months for Netflix. What else are you seeing as far as the short term?
Well, traders tend to try and drill into these shorter term windows and utilize alternate time frames to help them pinpoint entry and exit signals. And one of the things I've done on this chart is to change the time frame and incorporate some very basic simple moving averages that are consistent with the 10, the 20, and 50-day moving averages on a daily look. That purple downslope that we see at 1181 is representative of the 10-day moving average, essentially. And so some traders can look at the hourly chart over the last 30 days and just fine-tune their view. As you'll note, we're pretty much stuck in this $28 to $30 range over the last about week and a half or so. And if we break that, then, of course, Technical Analysis 101 suggests if you break the range one way or the other, then you take the height of that range and you can target the next area. Well, here you've got about a $30 range, maybe 1,030 on a breakdown. Becomes an area that bearish traders could look to target on the downside on any momentum-based move here in Netflix in the near term.
Yeah, and that speaks actually exactly to our example trade today, so appreciate that setup, Kevin. And now as we do look to trade Netflix for example purposes, Alex, I mean, given the fact that we've seen some more pessimism, August, September, historically weaker months, leaning into a more neutral to bear strategy.
Yeah, I just think it seems that Netflix turned a corner into -1 back at the end of June. It's been in a pretty consistent downtrend during that time. You're just going with that trend. Neutral to bearish, short call, vertical. Looking to go out to August 22nd, again, no earnings to contend with for at least a few more months. Looking at the 1200, 1205 call vertical looking to collect $1.70 or thereabouts. If you do, that's about a 2-to-1 risk reward. You risk 330, chance to make 170, break even 1201.70. Now the reason I selected that 1200 mark is that's sort of up in that range of that 1 month moving average as it down slopes, but you also start to get back into sort of the former lows of the move prior to that move to the all-time highs. So a little bit of supply at that level, perhaps it could hold, but really with this strategy, Jenny, you're looking for Netflix to go sideways or lower, much like it has been for the last month.
And I will say today that still modestly hanging on. I mean, we're barely lower, about a 0.1% on this session. But our next name today is definitely no stranger to some of that downside volatility, which is Tesla. Tesla has failed to enthuse time after time again, and it seems like Elon Musk has not really turned things around. But I mean, walk us through the latest with this chart, Kevin, because as we know with Tesla, when things change as far as sentiment, it can change rapidly. So we could always see things reverse here.
This one has really gone sideways for the better part of the last 4 months, though. The market's been moving and Tesla's not been participating. So what we note today is that the price action has us in the lower portion of what we've been seeing. We do have higher lows and lower highs, giving us that triangle in between everything, but we are also below all the 3 major moving averages, below the 20, below the 50, below the 200. So we don't clearly have a current trend. We've just been moving sideways, and I love to use the term meandering, and that's really what we've done here with Tesla. Haven't really made much of a move. The stock is off about 27% year to date. That's obviously not fantastic in the face of what the rest of the market's been doing. But if you're a trader, you're waiting in all likelihood for a break of one of those white lines on the chart. It's going to be a lot more instructive about an opportunity in the near term. Although my next chart, as we'll talk here in just a second, Jenny, is going to talk about a longer term view so that we don't always get mired in what's happening in the near term and kind of miss the forest for the trees.
Okay, so then give us that longer term take, and I mean, this actually is somewhat encouraging, but I guess it depends on where you would get in on Tesla, because it really depends. There's certain levels where you could say, hey, we've improved over the last several years, and you go back to 2021, and you'd say, have we really improved? I mean, we're pretty much back at levels seen 4 years ago.
Well, as always is the case, Jenny, time frame for your trading, for your investing is what matters most, right? And so if you're a longer term investor, a look at the weekly chart will at least give you some reason for optimism. You absolutely, on this 10-year weekly logarithmic scale, we have an uptrend that is clearly in place. We still have higher lows along the way. Yes, we made a higher high with the last break through that 410 ledge above us. But at the same time, we've consolidated or pulled back and have just essentially allowed time to pass without making any new big moves one way or the other. That RSI down below kind of speaking to the need for consolidation, maybe the need of a longer range trend test. That could
triple
be
bottom,
100-week moving average. That's what that
it's
light green
now or never
chart here represents. So it is consistent right with that long-range uptrend line as well. So perhaps the 260 area of short-term potential zone of support provides traders who want to participate in a longer range opportunity, a zone where they'd feel more comfortable doing so. Right
the
here,
621s,
maybe not as comfortable. A 10% plus pullback in Tesla to that support could be a lot more comfortable for many investors.
Yeah, and still firmly, 38% off of its even 52-week highs, which is not even illustrating an all-time high. So we appreciate that great technical insight and all of the help there, Kevin Horner, for the technical breakdown today. And now, last but not least, as we do look to trade Tesla for example purposes, we're looking at Tesla that is down now about 4% for the week.
Yeah, I looked at buying a put calendar down kind of where it saw a bid step into the market last time it went below 300, which is sort of in that upper 280s section on the chart. And so looking at the August 8th, that's next Friday, August 15th, the following Friday, 287.5 put calendar. Really looking for a move down to kind of 285 to 290 in that range over the next, let's call it 3, 4, 5 trading days into the end of next week. A debit of $250 means you have $250 in risk. That's a bear strategy, make no doubts about it, but you can't overshoot. So one that is looking for a little bit of a down move, but closer to, let's call it 3 or 4%, not something like a 10-15% decline if things really unravel next week.
Yeah, and I guess next week and really the month of August will be a key test for some of these names that have already underperformed. That can we see further weakness? Will we see an improvement? I guess it all really depends on Elon Musk and if he says anything outlandish, which he's always capable of doing. But we'll leave it there for Chartmaster today. Coming up next, it's time to talk one of really the leaders of the market this year. That's Palantir, which has been somewhat unstoppable. It is lower today, over 1%, but just closed out the month of July as one of the top 10 performers in the S&P 500. So we'll dive into earnings expectations coming up next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best
We're in the biz.
wealth management skills in the biz. Actually, I'm seeing something from Schwab.
In the biz.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning. All
Please, we're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades.
In the spy.
I'm Tom White.
I'm Kevin Hayes.
Don't cry.
Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready for
127,
all,
baby.
1 p.m. Eastern on the Schwab Network.
$131.
That's Next Gen Investing. We're talking all things Palantir ahead of their earnings. Joining us is Marley Caden, of course, host for the Schwab Network. But we'll start off with Palantir winning a pretty big Army pact. I mean, walk us through this story.
It's a pretty huge contract. Yeah, they just signed a new deal with the Army. Up to $10 billion is the value on this one. What they're going to do here is to try to meet some growing warfare demands over the next decade. So as part of the deal, Palantir is
Triple
going to
top
help the
studio.
military streamline efficiencies while they said they'll be preparing for threats and consolidating 75 total contracts into one full enterprise deal. That's what this does. The agreement creates what they're calling a comprehensive framework for the Army's future software and data needs that provides the government with purchasing flexibility and removes contract-related fees and procurement timelines. That's what putting those 75 total contracts into that one enterprise deal looks like. And then earlier this year with the Army, they do have another deal. They delivered the first of its 2 AI-powered systems as a part of a different $178 million contract that they have. But obviously with this one having a $10 billion price,
Yay. Triple top. You got to get out.
contract, and that's over a 10-year period.
Yeah,
Okay.
nice to have, you know,
I feel very bearish. But along being that, called a triple bottom, and then you run up to a triple top. So what do you do when you hit a triple top? There's 2 things you could do. One, scale out, take some profit because a triple top is bearish, or you hope for a triple top break. So you got the triple bottom leading out with a hammer to a triple top. Now, so what did Jimmy do? If you got in the trade, you should be getting out of it, scale out, or hold a few. Am I correct? Yes or no? My IRS check cash today. Why couldn't they notice that yesterday? I sat around here for almost a week. How many days? 28, 29, 30, 31, 1, 5 days. Waiting, why ain't this thing cashed yet? It's time for a gyro exercise. Now, switcheroo, can you do it? Just like putting 40 pounds of weight, 20 pounds of weight on your hands and swinging it around over in small little circles. It's called it. So we're pulling back. Now, what do you see on this here chart? Left shoulder, head. Right shoulder, 3 black whores. Prepare ye in the name of the Lord. $1. We're at another triple bottom. We're at another triple bottom. James Howard, will you please come to the front desk? James Howard, please come to the front desk. Are you Washboard Jim? Didn't I hear you down in Eureka Springs playing with the Shiners back in 2004? $95 to $112 there. Okay. I'm not over trading at all today. 117. SPY, if you can count to 4, you might make a little more. We just hit the 50 SMA on the 1 minute. So what do? The chart suggests that we're squeezing between. We squeezed between the 9 and the 21 with a doji, and we hit the 50 SMA. Now we're squeezing between the 9 and the 21 again. One, two, three, four. 1, 2, 3, 4. Sweet spot. Do or die.
to do with the labor market. We're now starting to see that impact show up, in particular with the jobs report from July and the downward revisions from the prior 2 months.
Jordan, talk to me a little bit about immigration, how that factors in. One of the things Jerome Powell talked a lot about was the balance and the unemployment rate kind of remaining in balance. Maybe you're seeing demand come down, but also supply is coming down too. How important is that to the equation?
Well, that's our biggest concern when it comes to the hourly wage market right now. What is the inflection point of hourly wage to have an unemployed worker become employed? Is it $15 an hour? Is it $20 an hour? There's a lot of economic research that needs to be conducted still so that we can arrive at a theoretical minimum wage that's going to allow us to continue to hire people into those hourly jobs. Whatever we're going to say about it, immigrant labor fuels a lot of the low-end labor economy in this country. And if we're going to remove those workers, we're going to need to replace them with domestic workers.
You're so full of shit.
In order to do that, we're going to have to...
He's full of crap. He's full of crap. What did we do when we didn't have them here? They're illegal, you idiot. They weren't invited in with a visa or a work pass. They're criminals. I don't even want to listen to your shit. We got a bull flag getting ready to break out, I think. And I tell you what, Wall Street's crooked.
Whether you're a bull
The
or
new
a
Wall
bear,
Street.
you want to catch the latest market action on Morning Move.
The Wall Street we live in now is more crooked than it's ever been. Now get me a cup. They're 127 now. 129. We're running into the 21. Oh, that's a green one. I don't need green. Or do I? Nah. We'll keep it. Oh, that's a beautiful pin right there. Four-way liquid medium. Yeah, I like that one. A little smeary. I don't like that, so that's a no-gooder. Okay, we're retesting the bull flag. $6.20 has to hold right here. I love legal immigrants. We got 3 minutes till it's 2 o'clock Eastern time, which is Funky's thingamajigger every hour. Did you hear that, Bobby? Ooh. Ouch. You should have got a hold of me there, buddy. Jesse. Let's see what happens here. Spy's got to hold 620. Does anybody know what I been saying for the last couple of days about the market? It's been selling off. after the bounce, almost religiously. SPY 620 has to hold. Take that to the bank. Bobby remembers. Okay. Let's open a can of whoop ass. Okay. Tempting to go have my second glass of tea. Okay, we're getting close to support. 620, just a little bit under it. We could hit a little under 620, but that's just a trim line on the bottom of the flag. $6.20. Gosh, we're getting close. I'm going to move them up to 620. Okay, prepare ye in the name of the Lord. It's really not the best time, but we're going to do it. Is there a thing you can do about it? $6.20. 124. Yippee! Ooh. Riders in the sky. Ghost riders in the sky. Oh, we got a new one of me, huh?
$2 for a piece of toast? Bullshit!
That's right, $2 for a piece of toast.
$2 for a piece of toast? Bullshit!
$2 for a piece of toast. You can do it. Uh-oh. Problem. Problem. I wasn't watching. So now it's got to break 620. Okay. Is this a fake out? I'm ready to take a nap. And I did an ad. I'm going to add here. Like. .02. 103, 10, oh, there it is. Got a hold. Oh shit. Oh no. .102 and 124, tweezer bottom on the 5 minute. Oh yeah, I get tired. Baker Hughes oil rig count. I feel like I want to take a nap. I really do. Nothing to keep my eyes open right now. So I'm going to go make another tea. I'm still in this oak. 112. Here we go. This. Oh. Let's go, R. $119. $125. Profit.
Anytime I'm coming through Dallas, I go to Nick and Sam's Steakhouse. You have to get a reservation with the Sapphire Reserve card. The tables, they go quick because the steak is phenomenal. It's not quite as good as my dad's steak, close. And that's pretty dang good.
Up, down, got
And you don't mess around with Jim. That's Big Jim, yeah. Let's break the 9. Don't mess around with Jim. Oh, boo-boo-doo-dee. Mid into the wind, and you don't mess around with Jim. Yeah. Jim's a badass. He was a ladies' man until he got older. Then he shaved that mustache. And you don't mess around with Jim. Let's break that 9 to the 21. 126, yeah. Damn, man. Look at that. Whoa.
Real class gets you further. We'll give you up to 100.
What do you think about that? 131, man. 133. Come on, chickadee. Let's get. Don't spit into the wind. Break that 9 EMA and don't mess around with Jim. Boo-ba-doo-ba-doo. My average is 112. I've got 132. I'm gonna break to the 21. What are you gonna do? Oh, boo boo boo. Well, take a little profit. Take it off the table. If you can push that mouse, then you will be able to do, yeah. I got 149. I don't wanna walk that line. I got out, no doubt. I'm the biggest man. Don't mess around with Jim, yeah. I'm out at 149. Don't let the bitch walk the line. Loop doo 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 doo. I'm winning. I'm on a winning streak. Don't take it, no, don't mess around with me. 160, yeah. I'm all out of the trade. Some say I got it made. I hit the 21, yeah. Boo-ba-doo, boo-boo, doo, 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 yeah. '21 EMA. I am out of the stock. I don't hit my curly locks. Up on MC, but you don't mess around with Jim. Boo boo doo doo. Da 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 da. Dee dee. Jesse, you remember the day I had the other day? When I took my big loss? I didn't give up. I came back the next day stronger and better than before. I refocused and I didn't let it bother me. The only thing that bothered me is someone followed me in the trade. Nobody's 100%. And you'll get back what you just spent. We're at 183. Whew. Oh man, that's cool. That is cool. That's real cool. I'm gonna save that. Damn. That is too cool. I'm flat. I don't know what to say. I think that's the coolest thing I've ever seen in a long time. Pencil Jimmy. We'll go Jimmy. That's real good. Do you know I was a picture framer for 18 years? I know good art when I see it. You got my cauliflower ears even. My flat nose. My broken nose. That nose has been broke 3 times. Don't mess around with Jim. That is really cool. We hit the 50 SMA. I've been sitting here waiting most of the day. Can we break the 50 and run it up? I take some profit off the table and have a cup of vodka. Oh, yeah, 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 yeah. God darn. 63. We're at the 63 EMA, and I got out way too soon. I'm very upset. You know how much money I just left on the table? Too much to count. $20 times dollar. I left $2,000. I just left $2,000 on the table. We just hit the 63. Don't mess around with me. Don't mess around. Now you see how patience worked on that one there? Jimmy waited. I'm quite impressed. Although I did get in a little early, I think my pullback entry was excellent. I left at least $2,600 on the table. That's the bad part. $271. We just broke the 63. Damn, 318, 322. Jeez. Woo! Take that, you fat cats. Do 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 do. Damn, I wish I held that. Oh boy. We hit the 30. Oh, that's not the 63. Now, where did I see the 63 on? Was that on a different? Oh, this is on the 2 minute. Jimmy was tripping out. He didn't see what he thought. Then he looked up at the time limit slot and slapped his head with a knot. It's on the 2 minute time frame. It's easy to see. You first charted on the 1 minute, so let me be a boo-boo-boo. Big Bad Jim. Miss Titellini is up.
How Bostic could say that with a straight face, given the numbers that we actually got. I think part of it is that the Fed really wants to slowly walk back some of their previous stance about how the Fed is in solid condition.
Whatever you do, don't tell her I said that.
Really do confirm what Chris Waller and Michelle Bowman were saying about that there were early signs of weakness in the labor market, and they anticipated that we would see some bad revisions to previous months, and they're being vindicated here. Now, I do have to point out, we did actually see an acceleration in job creation from the June number. So maybe May and June were as bad as it gets, and we could get to a slightly firmer footing from here.
Yeah, I mean, we've seen obviously cuts from the government, things like that have been happening. You've had an exodus of folks that are foreign-born. For example, Joe Brusuelas told me 341,000 foreign-born workers have exited the workforce. We know what's been going on with immigration. What are some of your thoughts, Patrick?
Yeah, so weak number today, and obviously the market's reflecting that. I think the stock market was looking for a reason to correct, and the tariffs coming into play today, along with the weak job numbers, are certainly weighing on equities. I think the most notable thing are the revisions from May and June, and it really kind of casts some doubt in terms of the validity and
You mean we're not making up job numbers like they did under the Biden administration, you idiot? You all fell for that one, didn't you?
Trade deals coming online now and get more clarity there, and there will be a lot.
Now that you got real numbers, it's hard to trade, ain't it? They're not artificially inseminated.
And 58,000, leaving us pretty much with about 35,000 jobs added in 3 months from what I read. I didn't do the calculations myself, but maybe it's just a moment in time, and that's why you have some of the Fed speakers saying, listen, we have to wait and see. In fact, Bostic noted he was more concerned still about inflation than he was about labor. Brian, what else fits into the big story here? I mean, you have multiple things that you can talk about. We have tariffs, we have what's going on also with investing in like AI and technology. That's something that you feel a little more confident about, right?
Yeah, in terms of our investment committee here, where we're seeing some opportunities, because despite the downturn in the market, we do view this as creating an opportunity to reposition in areas that maybe you are more positive on for the future. And there are some parts of technology that are almost becoming business staples, kind of like, consumer staples. People buy those no matter what. There are certain things, especially in the area of like data centers, cloud computing and the such, advertising spending, that is almost become a business staple. We saw that in the numbers from Meta and from Microsoft, to an extent Amazon Web Services as well, even though that was a little bit weaker than expected as far as the growth there. So thinking about the business staples, but then even on the more consumer facing side, some interesting applications with artificial intelligence and technology on maybe medical equipment manufacturers. And so we actually do see still those pockets of opportunity despite all the noise that we're getting with the messy macroeconomic data.
Right, understood. And Patrick, we haven't talked about the trade deals and where that fits into the big story. The idea here, according to the administration, was that the tariffs would actually help and bring in money and, in fact, pay down debt and such. Some of your thoughts on jobs and trade deals and more.
Sure. Well, the tariff revenue is certainly bringing down the debt, or has the capacity to do so. That's captured in a different statistics, though. That's not showing up in the job report from this morning. I do think it's a net positive for our country, whether that's reflected in the labor market or the economy in general. Will be something that gets measured down the road. I will say that the average hourly wages is still remaining strong, and the GDP print earlier in the week was very strong. And so I definitely think there's a silver lining there. I think, again, if you're an employer and you're looking to make hiring decisions, you're getting some of those uncertainties removed from the system in terms of trade deals coming online. Eventually there will be interest rate cuts. And the tax bill that was passed last month, you will have a lot to do with spending around 100% expensing. And so I think, there's a lot to be bullish about going into the end of the year and the beginning of the new year. But right now, the job weakness is kind of weighing on the market today.
So are you also worried about stagflation, Patrick, quickly?
I mean, look, we have kind of a little bit above normal inflation.
Bounce right off my support.
Sort of a sweet spot,
Apple.
a Goldilocks scenario, if you will. I'm sure the administration would like to see it tick down a little bit more to kind of nudge the Fed along, but I don't think we have any fear of stagflation hitting the U.S. system.
You?
Well, I think that if in terms of stagflation, it's very unlikely, because I do think that inflation is a process, and it's likely that we're going to see an increase in the prices, but not persistent inflation from the tariffs. So it is something that they can look through. And I agree in terms of the bullish outlook towards the end of the year from the tax incentives contained in the One Big Beautiful Bill for full expensing, research and experimentation and the such. The problem is it's a process that will play out over time. Maybe the market correction that we had at the beginning of the year was anticipating the May and June labor numbers, and now we can actually just more think about what's instead of worrying about the data.
He pulled that one out of his hat.
All right. Well, it's great to see you both.
Maybe.
Brian Jacobson and Patrick Healy. Thank you. That's
No, it had nothing to do with that.
I appreciate you being with us every single weekday here on the Schwab Network. I'm Nicole Petalides. Have a great weekend.
I love you.
Price is next.
I'm back to loving you again. I hope you forgive me. I had a crush on Caroline, but she's gone. Now I'm back to you.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Good afternoon. It's 3 p.m. on Wall Street, and this is
Oh,
Market
God.
Close. I'm Marley Caden. With an hour left in the trade,
No.
look at where the markets stand right now. We are seeing a sell-off in the red across the board.
You got your wish,
the
didn't you,
S&P
bitch?
down about 1 3/4% right now, trading at 6232.52. The Nasdaq 100 has gone down more than 2% on the day at 22,755.32. The Dow down about 1 1/4% at 43,571.71. And the Russell 2000 down about 2% as well at 2167.70. As we take a look at some of our futures products, we are seeing the dollar down on the day about 0.8%. Gold, of course, then up on the day about 1.5% at 3,490. Crude oil down almost 3% on the day, under that $68 a barrel mark. And Bitcoin, one of the lowest prices that we've seen in a while, down 2 3/4%. About 114,000 for Bitcoin right now. Lots of stocks on the move today, most of them not in a positive direction, but we've got lots to talk about. So I want to bring in Jenny Horn, the co-host of Next Gen Investing, to help break down some of today's top stories and some of the stocks we're seeing on the move. You know, of course, Amazon, the first one to talk about. We covered their earnings yesterday on the show after the market closed. They beat expectations on both the top and bottom lines, but as I look right now on the day, they are down more than 8%.
You got it wrong, didn't you,
One
Chick?
thing that is encouraging, and I know an 8% move to the downside is an 8% move, but they haven't accelerated some of the selling on the days. We've been lower 8% since pretty much I checked on things this morning at about 7 a.m. So it hasn't progressed in its pressure. I think the story is hugely second quarter cloud revenue. It matched expectations, up 17.5%, but incomparable to what we saw.
She's
from
got to
Google
put some
Cloud,
meat on herself.
32% pace
She
growth,
she
Azure
plucks her
growth,
eyes too much.
39%. So even with matching
Her eyeballs, she might have
expectations,
some issues.
slightly accelerating sequentially, that pace of growth, that acceleration was marginal, and I think that's where you see all the concern. I mean, the results did raise question about if Amazon's doing enough to capitalize on AI and demand for their cloud services. Even though they're spending pretty heavily, CapEx was roughly $31 billion in the quarter, up from $24 billion in the March quarter, and they expect similar layouts for the remainder of the 2 quarters this year. That suggests CapEx could reach $120 billion. So that was actually above the $100 billion previously expected. You'd think that would be a good thing. I know that was somewhat of the concern following Alphabet and Microsoft's reports, but management's commentary to me also failed to enthuse. Andy Jassy sounded frankly not as upbeat about all of their AI offerings as you would have guessed, considering this is where, again, $120 billion is where they're putting all of right now their
How did
growth.
that get
And
down there?
If you look at actually their retail offerings, the retail business as a standalone entity, I believe, would have been trading higher because it was nearly perfect as far as the entire e-commerce world, as they've also seen very little tariff impact.
And they also, the street wasn't thrilled about the guidance for this current quarter as well, right?
Yeah.
They operating income came in a little under expectations. It was in the range.
What'd
but
they do?
Went far lower than the midpoint.
Come in on your illegal immigrants.
I agree. Andy Jassy's commentary just felt like he was trying to reassure everyone. It wasn't optimistic. It just felt like pretty significant position. That's how he described AWS. Remember, it's like pretty significant?
Yeah, and I mean, he would also paint things in very broad strokes. Like when asked about AWS versus the competition,
Man,
he was like, hey, they're still the largest. Our market share is actually, if you look at the next biggest player, they're 65% of AWS, and I think that's encouraging in its own right, but it was also painted in very broad strokes where it wasn't specifics, and that's what the street likes. They like numbers. But if you look at the analyst commentary, I mean, I've seen now 7 analysts raise their price target.
God, here she goes with her analyst.
Canaccord, Rosenblatt, Telsey.
Dum bum. You're gone. We're going to listen to my prediction on Amazon because I was to the penny. Go up here and hit that 109, 723 and be a very strong buy, and run it back up and hit that double top, triple top. We got Amazon earnings coming out this week. Let's clear this chart up. So you can see we had I had a resistance line of 238 right here, and we hit that, almost hit that last week. So let's clear this up. We have the same, I mean, everything's a big run. I'm going to show you something, see if this hits the weekly. 200 EMA, boom, on the weekly. Double bottom, triple bottom right here. One, two, three, you can trade with me off the 200 EMA. Was a strong buy for Amazon. I called it out. Then we've got a wedge, a rising wedge. And we're about ready to squeeze that rising wedge to a double top. Chart patterns, moving averages, and being in the now. So 238.35, and we almost hit that last week. Solid support will be this here head and shoulders. 230 to stay bullish. If not, the next support line, we've got a squeeze going on. So this thing could drop to this head and shoulders right here. and be a very strong buy. And I'm gonna leave that alert right there. But the strong buy would be off the 21 EMA. $211.27. Perfect. I mean, if that does dip down there, Amazon could easily run up there and hit 238.35 and make new highs and hit that double top on the highs there. That's a rising wedge. So you remember that trend line I put in there? Well, that might have... There's the rising wedge. I don't remember it coming. I guess I came in and recharted it here to the 63. Head and shoulders. $211.27. So I was $1 off, $1.50. $211.27. Pretty good. I'll give an A plus for that. Or an A. Little A with plus. Little A plus. It's now post power hour. Jimmy's at support on a Tesla, oh yeah. Hike. Can't wait till this day's over with because I really got to go lay down and take a nap. I'll wait and get paper towels Monday. Oh, you guys are gonna make some tea. That would be a real bad idea. It's really going to ruin my day having her on here until I get. I don't know. She's hard to warm up to.
Still being properly appreciated in a lot of ways? No, and Alphabet's a pretty good example of just that.
It certainly is, and
Goodbye.
And I think
Oh, here's that guy.
is that the official data collection process hasn't really taken as much advantage as they should from this high frequency data that can make the revisions less violent. I mean, today, Mike, we've completely changed the view of the labor market. The revisions were so large.
You're going on one number. 1 month. You know what? I smell fuzzy meth.
That is absolutely true, and as I was saying, it sometimes does happen when you have, real speed changes within the economy or inflection
Rick
points.
Santelli.
But I guess maybe I'm enough of a believer in market wisdom or how markets react to things to suggest that look at the dramatic 2-year note yield reaction to today's numbers and the downward revisions, right? We're down like 22 basis points in the 2-year note. That means that the market said, well, I guess this is new information or newly estimated snapshot of the economy, and we have to react to it. If it were not considered to be the best possible guess that we have available to us, markets would probably ignore it.
No, I agree. I mean, there's two things going on with the 2-year. One is where we've come from, and in particular, Chair Powell came across much more hawkish than most people expected on Wednesday, putting in doubt a September cut. So you had the initial conditions that led to a higher 2-year than would have been otherwise, and then you got not only a significant fall in the 3-month moving average of new jobs, but the unemployment rate is the highest since 2020. So, those of us who are arguing for a rate cut this week were worried about the underlying strength of the labor market. And where did we get that worry from? From talking to employers. Employers have become much more hesitant to employ people, and now it's starting to get picked up in the data.
Where do you think that leaves the Fed? I mean, obviously they're going to have to take this into account here. Is there a way that this is just a stutter step in job growth, or it's a matter of reaction to the uncertainty overhang of tariffs that can soon be clarified?
When they first started raising interest rates, his primary goal was to screw over the employment labor market. That was his first focus. And then they kind of just all forgot about that to lower the rates. So we might get one here soon.
Discussing 25 or 50 in September.
And then I read another article that they did lower the interest rates because Kamala, C-U-M-A-L-A, was running and they wanted her to win. Another dingbat in the White House.
Percent into another year. So we've already pushed it back quite a while. I mean, it's 4 years now that we've been running above 2%. It wouldn't surprise me if we run another 2 to 3 years above 2%.
Right, and that's not something that the Fed.
Rob's looking at puts.
What's your general sense of, wherever we can make an educated guess on where tariffs do settle out, what it's going to mean for the global
on the
economy?
pop.
Because we've seen recently the
got to read the whole sentence.
Maybe with the European 15% tariffs, it seems as if the relative growth rates maybe shifted back in favor of the U.S. At least we thought so. So how is that going to affect the overall system?
So I think there's only one thing you can say with a high level of confidence, which is the multi-decade convergence toward lower rates and more uniform rates. That convergence is over. We're now living in a world of higher rates, less predictable, and less uniform. Beyond that, there are major questions. I don't think today is a destination. I think today is another stop to an ultimate destination which is still uncertain in terms of the US tariff regime. There are lots of negotiations ongoing with major countries. In addition, we don't know how governments are going to respond. We don't know how companies are going to respond. and we don't know who's going to pay the cost of the higher tariffs. It will depend not only on the sector, but on the company in the sector. So there's lots of question marks, and I think the only thing we know is that we are in a different regime overall, but we still don't know what the exact destination looks like.
We don't. That has been elusive. At one point, we thought it was going to be, July 2nd and then August 1st, and it keeps getting pushed. We'll see. Mohammed, great to have you. Good to talk to you. Have a good weekend.
Thank you, Mike.
All right, let's send it over to Christina Partsenevelos, who is tracking some bright spots in a down tape. Hi, Christina.
Hi, that's why I'm wearing this jacket today. Figma jumping 2% higher in only its second day as a publicly traded company. The design software startup shares more than tripled yesterday on their New York Stock Exchange debut. You can see actually inching closer to 3% higher. Falling interest rates helping home builder names rally even after President Trump announced, like you guys talked about, another round of tariffs. Top performing names include D.R. Horton, Lennar, and Pulte Group, as investors bet that lower borrowing costs could offset potential tariff headwinds. And speaking of tariffs, First Solar expects its prices to actually increase because of those new levies on foreign-made solar panels. But the company's raised annual sales forecast is what is actually driving the same higher today, almost 7% higher, Mike.
All right, it's a jumpy one, this time to the upside. Thank you, Christina. We are just getting started. Coming up, much more on today's sell-off. Apple under pressure despite reporting a strong earnings number. Star Apple analyst Eric Woodring standing by with his first reaction.
We are live from the New York Stock Exchange. S&P down 1.6%. You're watching Closing Bell on CNBC.
Damn it. This is Kane Patrick. Hello, may I help you? What? Kane Patrick sounded like a duck. Quack. Always clean, this Jim. May I help you?
Hello?
Yeah, what's up, baby?
Hi, this is Amy with American Senior Citizens Care. How are you doing today?
Well, I think I've got lung cancer.
This call is about a new state-regulated final expense insurance plan which covers 100% of your burial, funeral, or cremation expenses. It is specifically designed for the people on fixed income or Social Security. Would you like to learn more about it?
Not
To
really.
qualify you for the plan, are you between the age of 40 and 80?
I'm close to 80.
Say that again, please.
I'm very close to being 80 years old.
I can bring my product specialist on the line, and he can give you more information about it, okay?
Do you have a female instead?
Shares of Apple lower amid the broader market sell-off despite a Q3 earnings beat last night from the company. Joining me now to discuss the print is Morgan Stanley's Eric Woodring. Eric, great to have you on. I wonder if, first of all, you just give me your sense of why the stock is reacting. Obviously, it's a sloppy tape, but if there's something your clients are suggesting gave them pause.
Sure. Hey, Mike, thank you for having me on. So, if we take a step back, I actually thought this was one of Apple's more impressive earnings prints in quite some time. You got upside to the June quarter results, even when you take away the fact that there was some pull forward and maybe some one-time benefit from discounting in China. Services was very strong. That was a key sticking point leading up into the quarter. Obviously, that accelerated. Gross margins were strong, and frankly, the guide for the September quarter was much better than expected. So all across the board, again, overall stronger than expected. I think the areas where maybe there's some nitpicking is there was some pull forward that benefited the June quarter. As we know, September is typically the quarter that Apple launches its new phone, and therefore it's really a sell-in quarter. And so the September quarter guide is maybe a bit more reflective of sell-in as opposed to sell-through. But really, when we take a step back, I think what we've heard this week and maybe over the last 2 weeks has been rhetoric more concentrated around tariffs. And as you know,
yes,
right now Apple has exemption on tariffs for most of their main products, but Section 232 tariffs do pose a threat, and they are imminent. We would say if there's a, call it 15% tariff on semiconductor content for a company like Apple, that could be.
God. Goodbye. Just can't get away from it. They've been talking tariffs for over a year and a half. We get a little bitty pullback, and they're like they got ants in their pants. I'll do a video this weekend again for the SPY, the SPX, the IWM, and the QQQ. Please watch and hit that like button when it comes out. I was a little impressed on my last earnings video. I think, let me see, had 131 views and only 8 likes. Most of them were spot on. All but Reddit. Or did I? Let me see what I did on Reddit. That's at the end.
Using Fibonacci's on this trade on the weekly. So we have a resistance to break next week. 157. We have support to hold at the 9. And if that doesn't hold, we could, depends on how the earnings are. This is a fairly new stock. It's been around now for a little bit, for about a year and a half. So resistance to break is going to be 157.18. To stay bullish, 139.29. And if that doesn't hold, we'll use these moving averages on the weekly. The 21 EMA, the 50 SMA, and the 63 EMA.
I was way off on this one.
We'll go to the daily. The 200 will be your solid support. I like this setup. I like it a lot.
He likes it a lot.
So I think we're going to come up and reconnect with that 157.18, or we'll pull back and get a strong buy at 139.29. Maybe a little bit higher. Maybe 141.54. As long as we hold that 21, I'd swing this trade to the upside. I'm liking that one. And then the last one, Carvana. One hell of a run on this stock. We
Oh, Jimmy was right. Jimmy was right. Let me look at this again. Jimmy liked the setup. He said we'd pull back a little bit.
He's using Fibonacci's on this trade on the weekly. So we have a resistance to break next week. 157. We have support to hold at the 9. And if that doesn't hold, we could, depends on how the earnings are. This is a fairly new stock. It's been around now for a little bit, for about a year and a half. So resistance to breaks can be 157.18. To stay bullish, 139.29.
You did that.
And if that doesn't hold, we'll use these moving averages on the weekly. The 21 EMA, the 50 SMA, and the 63 EMA. So we'll go to the daily. The 200 will be your solid support. I like this setup. I like it a lot.
I should have said cup and handle.
We'll come up and reconnect with that 157.18.
We did.
And we'll pull back and get a strong buy at 139.29. Maybe a little bit higher.
We didn't do that though.
Maybe
we pulled back earlier. 141.54.
I'd swing this trade to the upside. I'm liking that one. And then the last one, Carvana.
I would swing this trade up to the upside if we hit 141.54 with a low support at 139.29. I was 6 cents off. I got a 6 cents. I was A plus.
One hell of a run on this stock. We pulled back to the 50 SMA.
That's one I should have paid closer attention to. I just get so involved in trading the SPX and the SPY, I need to get back to looking at these stocks, and I call them out. Jimmy said he loved the setup. Jim, we don't know how you do it. you sit here and you talk smack all day long. Did you ever think about selling? I'm down 95%. No. No, I can't. No. No, I can't.
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
Jim, have you ever thought about streaking across the White House grounds?
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
I just can't do it.
You're down 95.
Jim, have you ever thought about asking Melania out for a date? Yes, I have. And I still might. Okay, Jimmy's watching his calls here. He's looking at the SPX. Bad labor market news, I don't know. Have you ever thought about buying a lotto at the end of the day on the SPX? Yes. Yes, I have. Yes. Did you notice that they were a little bit too high priced? Yes, I did notice that. So we need a fat little knife before I'd think about it. The 6240s. To that. I doubt if we get down there. Prepare ye in the name of the Lord. We have a megaphone, a bullish megaphone. I'm going to buy one contract of the 6240s. I've made a business decision. Jim, have you ever thought about having premarital sex? No. No. I can't. No.
You're down 95%. Have you ever considered selling?
No, I can't. It's no.
I like that one better.
You're down 95%. Have you ever considered selling?
No, I can't. It's no.
Rob still has the 6220 puts. We're bullish inside the megaphone right now. We're about ready to break the pivot point channel. That's the bottom of the orb on premarital sex. SPX. Dadgummit. There'd been $100, $110 right there. I just wanted a little more dip. That hurt. If I get a big fat knife, I'll buy a call. If I get a big fat knife, I buy a call. I'll buy the call if it drops in it all. Then I'll go to Battlefield Mall. I think this week I'm going to buy a new shirt. There's sheepit. I'm done for the day. Man, look at that. God. Oh, I'm so upset. $10 to the top of the megaphone. Oh, shit. Right to it. Look at that. 1, 2, 3. Boom. 1, 2, 3. Boom. If I'd have caught this sooner, I would have jumped on it there. For sure. No brainer. I'm going to have a nice little nap. 10 more minutes. Been a pretty good day though. Left quite a little bit of money on the table. About $4 grand, maybe $4 grand. And then this trade here would have been a doozy. I'd only got one contract, but it had been $700. I sat there and looked at 3. All I had to do is push it. $300 made 200%. Jim, can you look at NVIDIA? There's the knife. Your first support is going to be this previous high we had right here. At 173.60, and then you got a gap, and that's at 170.37. I think that gap's more important than the 21, but it could, and we almost touched that gap. That's called gap trading. So the bottom line for a strong buy would be right around 167.13. That'll be your pivot point area inside the gap. With a low strong buy at 165.49, about a $9 drop. $11 drop. No. Yeah, 9. So it's going to hold the 21 or get above the 9. If it gets above the 9 next week, you can run it back up. So that 9 is your major resistance level. On the weekly, this is all done on the weekly time frame. Then you take it to the daily. Where is the daily? Oh, that is the daily. What? That was the daily. How can that happen? That ain't right. That's a weekly time frame. I guess it's... What the fuck am I doing here? So now I'm looking at the weekly. Thought I was looking at the weekly. $159, $160 is your support. If that doesn't hold on the weekly, strong buy at 150, 148. Now on the daily, we got the 9, and that's at gap. So at gap support right there on the 9. And this really looks like a good spot right here at 167. If it comes down to a double bottom at 167, I think that'll be your spot to watch closely for a scalp. And then to swing it right around 160 to back to the upside on NVIDIA. Hike. Dadgummit, look what I missed. Back to the 200 with 3 black crows and tweezer bottom. Boom. Jeez. I bet you all got that, didn't you? That's funny. Remember when I was talking about the jobs numbers, that they might be fake? Look what Trump did today. Trump and I are on the same wavelength. That'd be a great assistant for him. I think it's fuzzy math too. We have 1 minute left. Yeah, I'd have took that trade. You understand why I'd have took that trade, right? 3 black crows off the 200 with a tweezer bottom. Hell yeah, I'd have took that trade. There'd been no hesitation at all if I'd have spotted it and I wasn't playing around having fun. But I'm burned out. I'm gonna go lay down. I'm just too tired to trade. Take a good 10-15 minute nap. Well. The fat cats, Trump thinks fat cats are lying about the employment numbers. And I have kind of an anchoring to believe him. I think the earnings have been good this week. Average, some were not, but a lot of them were good, and some of them stocks pulled back off of them. Then you had something like Reddick that just broke out. Apple's numbers were good. So we pulled back here at the end of the day. We come in Monday. We'll see what goes on with the news over the weekend. And I'm going to do a video after I watch a little bit of news. See, it's all trading pattern. I mean, my strategy is all about chart patterns, moving averages, and being in the now. And to become a well-rounded trader, you got to be in the now, and you got to get that sense. If we're up too high, or to be cautious, maybe to be a little bit bullish. But right now, you know, the rhetoric that I hear for the last 2 weeks, and these, again, the fat cats missed out. I think we are just due for a small correction, not a big one. And we might have already had it. You know, like one of them total day flushes. So I'm going to get out of here and get some sleep. I'm getting a little too tired. And I do appreciate it. I'm just very tired today. Later on, in a way.